You're very welcome to our April edition of Practice News, a packed webinar. Conal, if you can click to the next slide, I'll tell you a little bit what we're going to cover. We have our staples as usual, our UK tax update. We have a recording from our UK tax lead, Leon Chadoran, towards the end of the webinar at about 20 to 12. And of course, the spring statement this week, the UK economy not in a good way. Obviously, wage rises, different cuts and so on as well. MTD, of course, for income tax, that's another one on the horizon coming quickly for UK practitioners. I'm delighted as well to be joined by Gearóid O'Sullivan, our ROI tax lead. Gearóid will be joining us in about 15 minutes or so to give his ROI tax update. Regulation in your practice. Delighted to be joined again by the team Professional Standards, the Director of Professional Standards, Aidan Lamb, Head of Audit Monitoring, Anne Cullen, and Head of Projects and Professional Standards, Karen Flannery. We're going to talk about basically the updates from Anne basically on the key monitoring issues and the common issues they find when visiting firms for anti-money laundering for audit. Other things just to prepare you for a monitoring visit if it's new to you as well, or particularly if you're new to the Institute. Aidan's going to talk about the work of the team and basically with relation to particularly the authorization team and a lot of changes and structuring of practice and so on as well. So if you're in that situation, how do you make that process as smooth as possible and interact with the Institute? And Karen has some changes for us to talk about projects, particularly around CSRD and sustainability assurance. So that'll be coming up about halfway through the show, about 11 o'clock. Delighted to be joined as well by two new people to our show, Tom Moran and Johnny Hart, Chair and Vice Chair of the Chartered Accountants Interim Managers. We're going to learn about what the group actually does and also how it can help you and your clients to maybe fill needs for work needs and how you can collaborate with these very experienced members of the Institute. So great to have Tom and Johnny joining us. Conal is going to give you a quick overview of our practice survey. Thanks to everyone who actually participated, well over 300 responses in, some very interesting findings. So Conal will dive into those shortly. And I'm also going to give you a quick overview of the SME audit market survey and work by the FRC. And also delighted to be joined by Mike O'Halloran back on the webinar from Professional Accountancy, talking to you about CSRD, but a couple of other technical updates, technical alerts and so on that have been put out there too. Listen, if you can click to the next slide, Conal, I've pretty much introduced the people already there. This is our team here, as I say, Anne, Aidan and Karen from Professional Standards, Leon and Gearóid from the tax side, Mike from Professional Accounting. And if you don't know me, my name is Jeremy Toomey from Practice Consulting, and Conal Kennedy is our Head of Practice Consulting. That's your Institute team this morning. If you want to click ahead again, delighted to have our guest members from Interim Managers. That's a live link on the PDFs that Chris has actually dropped into the actual chat function now. You can download them, or he will be dropping into the chat function, I think, very shortly. And that's a live link to the Interim Managers website. And yes, he's dropped them in. Thank you, Chris. A live link there. And you can learn about Interim Managers. That's Tom Moran, the chair, and that's Johnny Hart. And Tom and Johnny will be joining us about 11:30 and have a chat with Conal on their good work. You can click ahead again, Conal. Yeah, our timeline, that is pretty much what I've outlined already. Professional Standards coming up at 11, Tom and Johnny 11:30, UK tax update then, and Gearóid and ourselves before that. Conal, if you can click ahead again. Disclaimer, very important in this webinar. God, we're covering a whole breadth of materials here. We have a lot of links to guidance, a lot of different things. So look, please always be aware these are just general guidance. Any specific situations that relate to code of ethics or particular public practice regulations we'll pick for your clients, for your practice. You of course need to go to that and apply, as I say to you, and just be aware that these are just general slides. Conal, if we can click on to the next slide. Our practice updates, we will have an issue of Practice Matters. Our April issue is quite early in the month. That'll be issuing over the coming days. We're just going to give you a couple of updates, and the lead story this month, Conal, is the spring survey that we actually put out, and thank you everyone who participated in the recent weeks. So you have some key highlights. So the first kind of sneak preview, Conal.
Absolutely, yes indeed. First of all, I'd like to thank everybody who participated in it. 334 people participated, which is great. 80% of those were principals in practices, and then other roles in practice after that. Of the types of practices who responded, 49% were from sole practitioners, 27% were from practices with two principals, and then obviously that takes up a goodly share, and then larger practices after that. So it's really focused, if you like, on those two sectors primarily. That's where the answers are coming from when I give you the percentages. One thing I would say is that, I mean, yeah, we absolutely did. We asked, we took the other three sort of layers where practice was 3 to 5 principles, 6 to 9 principles, and 10 principles and more. Okay, but that said, by and large, what I would have taken from it was the level of consistency across those practices. Which, again, it's the things you don't necessarily expect from these things that are worth remarking on always. So when I make these points about, say, things we say about AI, for example, whilst there was differences, the big stories stayed largely consistent across the various practices, the various sizes of practices, and indeed locations of practice. And we looked at Northern Ireland, the Republic, Dublin, other regions, and so forth. We saw a lot of consistency. Now, first thing, I'll say 61% of practices say that they don't use artificial intelligence for anything significant, which I think was a very significant finding in itself. Whilst we hear a lot about AI at the moment, and people are wondering, well, is everybody using this? What are they using it for? Like that was consistent across sizes of practices that we're talking about. So in this cohort, people are looking, waiting and seeing so far. One thing you do think about is, well, is the usage higher, but people don't necessarily recognize it as such? Is it that there's people in your practice using it and not really talking about it? For example, you could have junior staff using it, or is AI embedded in a lot of the things that you use that you wouldn't necessarily think of? But there you go. But look, let's leave that aside. We'll take I think the important thing when we put out a survey is, first and foremost, is to take the responses for what they are. People thought about them and gave the response. So that's the response there. 61% say that they don't use AI at the moment for anything significant. And we didn't ask people to look forward as to what they would do. We've done another AI survey, which we'll be publishing soon, which I think would be well worth looking at. So you just watch for e-news for the specific AI survey that we're going to be publishing soon. But anyways, what did people use AI for? About 29%, which is high enough. Use it for tax research and planning. Now, obviously, there's a few tools out there which are very, very useful. Obviously, they have to be used with caution. I've seen those AI tools get it wrong, but at the same time, they're pretty good for reminding you of what you might have forgotten about, giving you a structure to a response, giving you a head start on giving a response to a client. But as always, with that degree of caution. Will we still be saying that degree of caution in a few years' time? I don't know, but that's where things are at the moment. 29% say they use for tax planning. Client communications, another one. Preparing presentations, another use that people are putting it to. In around the 20% level is what you're talking about. What I would read from that is, a few practices using it a fair bit, a lot of practices not using it very much at all. Okay, 46% when they're asked, well, what sort of opportunities do they said the one that they picked out was specializing in a niche service. That's the number one area that people are thinking about in terms of, well, what do I have to do next? The next one after that was to specialize in a niche industry. So niche service followed by niche industry. That's what people are thinking about. And then the last 2 points here on this slide, you should take them together because there were 2 responses to the same question, which I thought were worth splitting out into 2 responses. So when we asked people what they thought technology was going to, how it's going to affect their practice over the next 5 to 10 years, people are saying it will be integrated into their practice, but people will remain central. That's the primary way that people are thinking. And then 27% that technology will automate most tasks to focus on high value work. I think it might be worth reflecting on whether those are also the same cohort who are using AI to a great extent. I suspect we'll find a degree of consistency across that. Okay, so other things to think about. When we ask people, what do you see as being major challenges? 69% responded that regulation of practice was a major challenge, which is certainly worth reflecting upon. 59% said attracting and retaining staff, the common issue. Dealing with technology was a challenge for 40% of people. Okay, so there's opportunities there. People are seeing opportunities in the area, but they're also seeing challenges. If you look at those responses and look across the sort of sectors, I would say that the sort of the larger practices identified attracting and retaining staff as being their most significant challenge. So as you sort of up the sizes of practices, that's where people focus in. Perhaps they're better able to deal with the regulation, but they still have the issue of trying to attract and retain staff. Looking at how people get clients, most popular way by far is reflected at about 95% said that they use referrals. Now, the next one I found challenging trying to interpret the findings of this, to be quite honest. I think what we're going to do is we're going to let people see the findings of this next question, because I'm not a statistician. Trying to present this in the most helpful way does present a bit of a challenge as to how to do it. But anyways, we asked a question, and the question was: if you took the chargeable time by staff and looked at the total cost of staff and expressed one as a multiple of the other, what was your multiple? And the most common multiple presented by people was in around 2.25, 225%. Now, again, that looks low to me. Traditionally, people have talked about a multiple of 3 charge out against staff costs. Now, I wonder were people, when they produced that multiple of 3, were they including all chargeable time, including their own chargeable time, which we asked people to exclude from this calculation when we were asking this specific question. So traditionally, were people including their own chargeable time when they come up with that multiple of 3? But nevertheless, look, I think it's worth putting out that question there. I think in future surveys we'll dig into this one, because I think it's worth asking more questions around this and reflecting back more answers. But that's the first answer that we've got. We've asked people to consider total cost of staff against total chargeability of staff, and that's the result that we've gotten so far. Somewhat higher amongst larger practices, not hugely now, not hugely, and a very broad spread. It means up to 3, down as far as 1.5 and lower. So it's a very broad spread. So 225 is kind of a so if we've considered a sort of flattish bell curve, it's the midpoint. We're picking in a very flat bell curve. Okay, so looking at how people are dealing with the current challenges of attracting and retaining staff, what they do in order to do that: 69% offer flexible working hours, and 53% offer remote working options. So as you can see, this is what people are doing across the board in practice. Confidence. There's a degree of confidence expressed by respondents about the future. The majority of people see a future for practice, that sometimes practices need to change their business model, need to specialize. When asked the question, Northern Ireland practices were somewhat more optimistic about the future than the Republic of Ireland, which I thought was interesting and certainly worth digging into and reflecting more upon. We're going to produce these we're going to give you more details, more detailed description and reflection indeed on these responses in the next edition of Practice Matters, which is coming out soon, and we are going to we're going to give you a link to the more detailed results so you can read them for yourselves. So listen, that's where it's at. Jeremy, back to yourself.
Thank you very, very much. Some very interesting findings there. And as you said, Conal, yes, as I've seen a draft of a lovely article and a quite detailed article for the next Practice Matters. And we'll be probably looking in more detail again, probably even in our June edition at this as well. So we can delve into these findings, and we hope to have more of these surveys, I think, as well, Conal, as we move on, because there's lots of different teams, be it technology or whatever else you can look at our practice profitability. This is one.
I just encourage people, if anybody wants to throw anything into the chat there about what I've just said, we certainly welcome your views so far on what you're seeing and what you're hearing about. And if you wanted to make any further suggestions for how we should do this going forward, we're really interested to hear it. This is all about you. Thanks, Jeremy. Back to yourself.
That's a very good point. Don't be shy on the questions. Do please use the Q&A function. I might have mentioned that at the start. and we'll try to answer questions if we can, or any one of the speakers as well. You might recall, guys, back in February, and you might have seen social media and even emails from us as well. Actually, it was in our most recent regulatory bulletin from Professional Standards as well. The FRC has recently begun a market study into the UK SME audit market. And Conal, if you click to the next slide, this is all part of an initiative encouraged by the new UK Labour government to help SMEs access audit services, but also to help SMEs grow really, and to reduce regulatory burden on their business sector. So basically here, to do this, one area that the FRC has been tasked with is to just complete a study and see the issues affecting UK SMEs, both from access of audit services, but also the challenges for auditors themselves in completing such audits, and any recommendations and any feedback coming from that there. So the FRC has taken a number of approaches here. It's actually had online workshops already and launched a study. You can click to the live link there in the second blue piece there in the middle, and the second point, this market study. And it has a few questions there. I know actually there are practices already that would have UK clients. It's not restricted to anyone based in the UK. If you want to apply to the market study, if you're in the Republic of Ireland and have UK clients, audit clients as well, you can reply to this market study. And Conal, if you can click ahead again, there is just a few questions there. It's up until the end of April. I know there has been a good response rate already, but the FRC is keen to have as much detail as possible. Just asking some key questions, particularly of auditors there. Basically, question 4, what, if any, challenges do audit firms experience in relation to audits of SMEs? It's also looking at the challenges that the SMEs themselves may have in this area. So if you do want to give your feedback, you can actually complete it in writing and send it to the FRC directly at that email address there, competition@frc.org.uk. Now, the FRC has also been organising workshops for auditors, capital providers and SMEs themselves during the month of March into early April. And they have asked us, and Conal, if you can click ahead again, they've asked the Institute if there are any interested SME auditors based in Northern Ireland that they'd like to have a workshop, probably 1 to 1.5 hours, just specifically get their verbal feedback to representatives at the FRC, and indeed Institute representatives will sit in on this as well. If you'd like to be involved in this workshop, no date has been set yet, but more than likely at some stage this month, you can email us to practice members by next Friday, the 11th of April, and we'll take your name details, and then we'll look to set the time for the actual feedback webinar. Well worth getting involved in, and also this will, right across the UK, shape the FRC's, I suppose, future help and guidance that it will provide to SMEs and auditors, but also looking at the audit regulations themselves and how we can reduce that burden onto the audit firms. So any questions, Conal, before we go further?
Yeah, one person asking about the tariffs. Why didn't the market see it coming? It was in his manifesto. Fair point. Someone says practice news is good, but too long. Fair enough. We'll do our best. Keep it as short as we can. Will Practice Consulting be updating this template letter of engagement for relevant paragraphs re AI? Really good question. Hadn't done it yet, but I said it's probably time to look at that one again. So really good point. We probably should. Someone says 90% use referrals to generate new clients, but these referrals mostly from existing clients or through networking or other organizations. Do these practices have an active policy of generating referrals, incentives, emails, ask for clients? Look, I felt when we asked the question, just have a quick look again at the question, if you don't mind, to just see exactly what it was we asked in terms of that. Just see if I can put my hand on it now. I'll tell you what, I'll get back to that.
You can come back to that one, as I say, Conal. It's a very good point, and it's even something that we'll touch upon, I think, in our chat with interim managers, obviously, because I know I was part of interim managers many years ago and looked at this as well, and referrals is so important when you're in practice, as interim managers would be too. So that's a topic that might come up in that one.
Well, the question was referrals from existing clients. That was what we asked.
Oh, yeah.
So it's not from a referral sort of grouping or whatever else, which do exist as well. Okay, listen, I think we better keep cracking on. So
we will indeed. Thank you, Chris. Chris has dropped a copy of the slides, and again, for any latecomers, if you haven't downloaded a PDF of the slides, Chris has dropped it into the chat function again just in the last minute or so. Please go there. Great links there, and you can download them and actually print them out, or just have them for yourself as we go through the actual webinar. That's us on our news items. It's next on to Republic of Ireland tax. And Gearóid, how are you? I know it's been a busy week for you.
Hi, Jeremy. Yeah, it's been a mad week to be honest. I think look, I note the comment there. How did we not see Wednesday coming? And I think look, we all saw tariffs coming. There's no doubt about that. But I think the thing is, it's the extent of the tariffs and the level of some of the tariffs. I think still is clearly taking the markets by storm. Um, in terms of comment on them, I think the first thing we need to be aware of, or just to say, is that these are totally unrelated to any clear actual policy. And look, I know we kind of joked at the start about having some sort of uh, to table up with your perceived numbers of what tariff should be, and then what the American tariff will be in response to that. It's apparently based on some trade deficit formula. But I think it's clear to see that it's very much within Trump's style of policy making, that they just kind of decide on what their basis is, and it's not very easy to follow. So from that point of view, it's clearly a dysfunctional tax measure. So I suppose there's no doubt about that. I think one thing that I'm finding interesting is the actual cost of this to to individual Americans. So the Tax Foundation are a group that put out very interesting research on tax policy, particularly US tax policy, and they estimate the cumulative cost over 10 years is $3.1 trillion, but that's amounting to a tax on individual households in America of $2,100 in 2025 alone. So the actual impact on individual Americans is absolutely sweeping, and I believe it brings their tax burden up above 18%, and that's higher than any Democrat administration in the last 20, 30 years, I believe. So did this tariff, while I suppose framed like a lot of Trump's policies as something to benefit Americans, is actually going to be a very real and hard cost for them. If you, I suppose, the kind of armchair economist will talk about, like myself, I put myself in that bracket because I've been a tax and accountant, but we do necessarily, obviously, in tax policy, keep a close eye on economics. But uh, the discussion is around the price of eggs. And I think that's sort of a good marker for things in the US, because of the amount of products that use eggs and the amount of eggs that are imported from places like Canada. So this is going to be a very real cost for Americans as well, and the impact of that on their economy is going to be interesting to watch, but likely very concerning, because if people can't spend money, that's sort of the beginnings of recession. An economy works because I get money from my employer, I go down to the butcher takes the money, buys something else, and pays tax along the way, and everywhere it keeps the whole cycle going. So we've all heard those kind of stories before. It's if you go onto a kind of standard YouTube economics 101, and you start to get kind of just the very basics of it there. So from an Irish point of view, you may have seen our Director of Members and Advocacy put out a press release kind of stating the Institute's position, so you can find that on LinkedIn uh, if you want to go looking for it. But look, the long and the short of it is, as Crona Claus, you mentioned, that really what we need to do is focus on what we can control and focus on Irish domestic business. So you'll hear time and again, I mentioned it at the start, Conan, you mentioned it, but it is about controlling the controllables here. It's very unknown, the space we're now going into. This is quite unprecedented, and it very much is the beginnings of a trade war. And I suppose it's the first time we'll see this type of, I suppose, this type of event in the world economy. So it really, we are stepping into a period of great unknown. Um, you also mentioned that we had Jack Chambers in yesterday. So the Institute is part of European Movement Ireland, the group that works to kind of raise awareness of uh, work going on within the Europe, within Europe and within the various organizations. Um, so I suppose the government, and certainly if you look at public expenditure, I suppose, how are they reacting to this? Well, obviously the tariffs are very concerning. So we do have to consider the potential cost of the impact on the Irish economy. The DSRI have put out data recently that will show a reduction in their projections for things like GDP and MDD, the modified domestic demand. I think what's encouraging from the department's point of view, I suppose worth mentioning, is that they're very much focused on infrastructure and infrastructure delivery. And it sounds like Minister Chambers has a very clear plan on how to sort of cohere all the various arms of government. And I think, you know, anyone here who's involved in construction, for example, or delivery of major infrastructure projects at any level, will see that often you have different arms of government kind of almost competing against each other, and I suppose actually taking each other to kind of to arbitration at the very least. But there is, I suppose, there's a bit of dysfunction there across the Irish administration, and that's normal. I think I wouldn't necessarily see that as something unique to Ireland. I think when you have what is a relatively young democracy overall, things are iterative, and over time things can get complicated, and we're just at a sort of an inflection point now where we need to actually just cohere a lot of systems, and I think digitalization would be a big part of that. But I suppose in terms of what we can do, as I say, in light of this the Wednesday's Liberation Day announcements, it really is just to focus on the domestic economy, and I think that's where we are for now. So it's I suppose our message to the government would be to really focus on supporting Irish business through this turbulent time. You know, we mentioned there I suppose in recent years things like whiskey and different products like that have had a real growth in America, even things like Irish butter, a whole load of Irish products. And obviously, it remains to be seen what happens in pharmaceuticals. But for now, at least, that's off the table. But you would have to expect something coming there. I think it's really just in focusing and supporting those business now over the coming months. So I suppose that's in some ways probably as much as I'll say on tariffs today. I think it is very much just we have to see what happens over the coming weeks and months. I do know that the prior to Wednesday, and again, just to the comment about what was known about this, I think speaking to colleagues in some of the European organisations that were part of Accountancy Europe and others, a couple of months ago, when the tariffs were starting to become a clear reality, Europe has been preparing for Wednesday for the last number of months, certainly since since Trump was inaugurated. So my understanding is there is a suite of measures there, but I suppose the other thing is and I think this is a fair approach, or at least an approach I'd be taking, but you know, just to throw it out there. But I think we have to urge caution, and sometimes, you know, a retaliation isn't necessarily, or a swift retaliation isn't necessarily the best path forward. And sometimes the best way to overcome things like this is not to become the very thing you're trying to fight against. So that's, I suppose, something to keep in mind. I think that's Sun Tzu probably said something along those lines. But jokes aside, I think it's just, I think we'd urge caution and a measured response. But again, there is likely to be a response from Europe. So look, I'll just move on to talk about some of the other key things I just wanted to mention. So the Department of Finance Business Tax Stakeholder Forum took place. The latest meeting of that group took place last week. So this is a forum that's been gathering for, this is its third year now, and it provides a really key opportunity for the Department of Finance to meet with various stakeholders, including ourselves, the Law Society, the Institute of Tax, the American Chamber of Commerce, IBEC, and others. It brings together also other government departments like Revenue, Department of Enterprise, Trade and Employment, and Tourism at times. So there's and also Enterprise Ireland, IDA Ireland are represented. So it's in terms of business taxes, a really good cross section of stakeholders participate in that meeting. I, Interestingly, what seems to be high on the agenda of the department is around decluttering and simplification. So I think this is, again, in terms of the European response to what's going on in America, and then indeed the Irish response, I think it's about taking control of what we can. And one of those things certainly would be the decluttering and simplification agenda. As I say, both I know it's a key part of the European agenda following the Draghi report that is issued in September. But also in Ireland, I think it's clear the cost of business is rising, and the regulatory burden has increased substantially. So again, this is something Minister Chamber mentioned yesterday at the Institute. The government are aware of the impact of regulation on businesses, and I think it's fair to say that while regulation, I think we're a heavily regulated profession, and we can see the benefit of robust regulation. But again, it's gone to a level which it needs to sort of be rebalanced, and that is on the government's agenda. Again, we see this in housing, particularly where the cost of building has risen, not alone because of material costs now, but also because obviously of the cost of regulation on buildings. So in tax, I suppose what we've mentioned to the government through the business tax stakeholder forum is that many reliefs have become very cumbersome, or indeed when they're introduced, they're just too complicated, or the tax risk associated with that complexity just puts people often claiming, or indeed discussing many of these things with their clients, or indeed you might discuss a particular measure with your client and say, look, for all the complexity involved, it's just not worth the issue. And I know the KEEP scheme was an example where the kind of complexity and the risk associated with falling out of the conditions ultimately put a lot of people off claiming it. I know when I was in practice, it's something that we talked about and thought about, but ultimately figured the traditional route was more straightforward. The other piece that came up with that form, and again, it's just in light of some of the complexity that was introduced with Pillar 2, and obviously back to the Trump administration and their withdrawal from the OECD Pillar 2 and Pillar 1 project. I think the concern at the moment, and it's known Europe-wide, it's known in Ireland as well, if countries other than, I suppose, if non-EU countries start pulling out of the Pillar 2 agreement as well and aren't charging taxes, what's the impact from a Europe perspective if they actually continue to apply the rules? So again, more uncertainty there, but again, known by the department, obviously, but the response to that will require, I suppose, Europe-wide agreement. So again, you can find the minutes of the previous meetings through that link. That links to a tax news story, just with a short update on it. But again, you can find the minutes of the previous meeting, and once the minutes of the current meeting are agreed, they will be published also, typically in a month's time or so. So just to mention a few other things, again, conscious we have a packed agenda today, so I'll try not to go on too long. The agent and advisor e-linking process. So this is a new process for linking clients in RAS. So this change was announced in the summer that Revenue were changing their process, and advisors through the talc collections process in particular, but also more recently it was escalated to main talc. They mentioned the additional burden this is going to place on agents. So the new process requires sort of a two-step process, where you'll load up the agent link approval form, and then you'll actually have to get the client themselves to approve it. So we did raise some of the issues this could present. For example, if a client doesn't have a RAS cert at all and can't access RAS, that again, it's slowing things down. Despite the concerns we have raised and other professional bodies also, Revenue have had to carry on with the process as envisaged by them. It does increase security in their point of view. I will say that when this came out first, I know I would have had concerns and shared the concerns of members, of course. But again, I've also seen in other jurisdictions that agency or security has been breached. Certainly in the US, there was an example where certain actors were claiming tax credits, claiming to be acting on behalf of taxpayers, and again, they were using a similar type of procedure to link themselves to taxpayers. So I think it's just important from Revenue's point of view that they have put in this extra layer of security. Unfortunately, this does mean an extra level of administration for practitioners, especially where you have historic clients. We have received feedback from members that this is causing, obviously, significant delays. Unfortunately, this is the system as it. So all I can do today is report that the change has gone live since the 25th of March. You can follow the link in the slides to get more information on it. But again, it is live now, and as I said, there has been substantial engagement with Revenue, but this is the process going forward. Then just to mention the last few things relatively briefly, the VAT and the digital age package was adopted recently. This is a suite of measures which will, as it says, bring VAT into the digital age. You'll also hear it referred to as VIDA, so that's the acronym that it will be commonly referred to as. The it will see a new e-invoicing, mandatory e-invoicing for VAT across the EU, and member states will have to implement this by the 1st of July 2030. So there is substantial lead-in time for VAT in the digital age. Revenue have started consulting taxpayers already. There was a consultation last year which you responded to. There's been 2 meetings under the Talcon Direct subcommittee just to sort of discuss revenues approach here. Ourselves in particular have raised the importance of making sure that this change is rolled out in an appropriate and phased manner, and just that the impact on small business is considered all along the way. So look, to be fair to Revenue, to give them their due now, they have been engaging already with practitioners, and as I say, with the public through public consultations. They have a full team behind this as well. So we'll continue to keep you updated in tax news. And look, for now, the change is certainly far off. But I think it's important just to keep in mind that this is coming in. So certainly for medium and larger clients, I'd certainly be I think I'd be starting to consider this, particularly if you're looking at systems upgrades in the next, I suppose from 2027 on, just considering that, well, if I put in a substantial system upgrade now and it's not able to cater for Vida in a few more years' time, they're just potentially run into issues there. So I just think it's one of those measures where it will be a substantial change. So the sooner you can start thinking about it, the better. And especially if you're working with not just in VAT, but certainly implementing our systems, sales systems, and purchasing systems for clients. I think important just to keep this in mind from now on, really, and just in particular, I think uh, around that instance of where there will be planning a major system upgrade, certainly ahead of the formal implementation date for Vida. Just to mention on Angel Investor Relief, so that commenced the 1st of March 2025. So this was introduced in Finance Number 2 Act 23. It's a relief that comes under the sort of employment and investment scheme. So it is under the GIBA rules. So any relief claimed for angel investor also must be considered in light of any relief claimed under the Employment Investment Incentive Scheme. But I think what's interesting about the schemes is angel investor relief is a CGT relief, with EAS and related reliefs being income tax reliefs. So many investors, but there will be a cohort of investors who will not actually have a substantial amount of income tax because of the nature of their income profile. So let's say tending to get more income from capital gains and other things. So if an individual tends to have a more substantial CGT bill, the angel investor relief will be of particular benefit to that type of person. So even though, say, if claim 500,000 of relief in angel investor, that reduces the amount I can claim under the EAS scheme. It benefits us with a slightly different profile. It benefits a different profile of taxpayer. So I suppose when you're looking at it, that's the thing to bear in mind for those clients with substantial CGT bills. Angel investor relief could potentially be a very worthwhile relief to them. It is complicated, but again, there's more information in the link there. And just at the risk of self-promotion, but I just thought it was interesting to link the conversation I had with Emmett Oliver on News Talk a couple of weeks ago now. This was just looking at whether it's better to get paid weekly or monthly. There was an article put out which suggested that because of the week 53 adjustment, that taxpayers were losing out on some valuable relief, or there was sort of a suggestion I think made that employers might be getting an extra day of work out of people, where people are salaried and paid on a monthly basis. I just think the key thing there with Emmett was just to kind of dispel that notion. I think if you are paid hourly, you'll get the benefit, obviously, of an extra leap year. I think that was the key point there. And then in terms of the individuals who are in receipt of a week 53 adjustment in a year, I think it's fair to say that the the amount involved there is quite minor anyway. But again, you can't exactly arrange your tax affairs to claim it, because then you fall out of it if you change your payment date in the year. And also, I suppose the benefits, I think, just to of being a salaried worker, or that you get a very you get a fixed amount of income per year. You can plan around that, and there's obviously a huge amount of benefits. And again, it tends to be the case that if you're paid hourly, you're what you tend again, there'd be exceptions, but you tend to be on the lower paid side of things. Whereas if you're paid a salary on a monthly basis, it'll tend to be in the higher end of things. So again, we all know, working in practice and working as professionals, that while we might be contracted for 30 odd hours a week or whatever the case is, that includes reasonable overtime. So I think when we do have this leap year, they made a bit about that on the day, but hopefully if anyone wants to listen back, they'll kind of get a sense of just how we tended to focus on some more substantive matters like pension contributions and share-based awards and things where there's actually more meaningful tax planning that can be done. But look, I've just left details there for the tax newsletter. So this issues every Monday, so you can find details and signing up to that below. And if you have any questions, our tax inbox is mentioned there as well. So I might hold it there, so conscious I've said a bit at this stage. So
Gearóid, thanks as well. That's a very comprehensive update. Yes, a very busy week, tariffs and so on as well, and great to have your insights there as well. Very ominous times ahead from the looks of it for consumers everywhere, American and here in Europe and everywhere else as well. That's a very good point actually on the tax newsletter. I'd say to anybody to actually, if you can access my account section, what we frequently find is people maybe haven't actually updated their communications preferences, their jobs, their different sectors they're actually working in many years. So if you log into my account, same as if you actually pay your annual fees, you can update your communications preferences to get comms from practice consulting, from the district society you actually live in, and so on as well. Make just things more targeted, more relevant to you, as well as get your tax newsletter as well. And I would say tax news on a Monday is a great read, as is e-news on a Friday. That'll be coming out in the next couple of hours. Gearóid, as ever, I know you're popular. There's been a few questions. E-linking has definitely caught the imagination, and I know it's having a few consequences. I'll leave you read those. I know you, thanks for joining us here this morning. I know you have a very busy schedule. You'll hopefully be able to address some of those online. I know you won't be with us at the end of the webinar, as you sometimes are, but if you do have any questions in the next few minutes, just drop them into chat. And if there's any more details, I know that if you need a more detailed chat or something, question comes up later, we send them on to you at Tax at Chartered Accountants, Gearóid, and I know you and the team would often get back to members.
yeah, exactly, Jeremy. And look, thanks very much as always for the chance to catch up with everyone here, and we'll talk to you soon.
And thank you for joining with us as well, as I say to you. So that's our Republic of Ireland tax update. Leon shall be joining us in about 45 minutes or so for the UK tax update. So moving on, and delighted now to be joined by our professional accountancy technical manager, Mike O'Halloran, a familiar face to many of you. I know Mike has worked in the Institute for a number of years and has joined us on numerous practice news and other technical webinars over the years as well. Mike, how are things with you this morning?
Yeah, all good, Jeremy. Enjoying the contribution so far. So always good to get an update, and certainly
if there's one thing we do well, we do variety in the context of accountancy and so on. Anyway, that's one thing. We definitely have something for everyone. Well, listen, talking about something for everyone, we didn't have so much of the technical content at the start of the webinar, but you're going to make up for that now. We have a few things to tell us.
That's it, yeah. So thanks as always for having me on, and hello to everyone. Yeah, I suppose it's just a quick update from myself today, just to give, I guess, an update on what's crossing our desks in the professional accounting team at the moment. And on the technical side of things, there's quite a bit there in terms of new publications and webinars that I've linked throughout the slides. And I'll also have a quick chat about the EU Omnibus proposals, which I guess will change the course of how many clients of the people on the call today will encounter the CSRD, hopefully all for the better, but we'll go through those. I guess starting with the first alert on the slide. So we've issued Technical Alert 1 of 2025, pointers for a firm's artificial intelligence policy. And this is, I guess, alluding to what Conal mentioned earlier in the practice survey. I guess, as the name suggests, the technical alert contains some guidance on steps that accountants can take when establishing an AI policy for their business or for their firms. And I guess AI can bring many benefits and many pitfalls, But I guess it's inevitable that if we're not currently using AI, we will encounter it in some way, shape, or form in most of our day-to-day roles. And I guess as a result of that, it's important that firms' policies are made clear to staff, particularly as regards, what AI can you use, what AI can't you use, and so on and so forth. So the technical alert, it stays quite high level, just given the nature of it. There's many different angles that different firms can go down, but it just poses questions as to what you might want to include in your firm's AI policy. So maybe the types of tools you might want to use, and more importantly, what ones aren't staff allowed to use. Consideration of confidentiality, consideration of data security, and those types of things. So that's a useful one for anybody updating their AI policy. Technical Alert 2 of 2025, so that's a letter in respect of the provision of limited assurance under CSRD. So we're going to have a chat about CSRD shortly. But before we get into the details of the omnibus proposals, I just want to flag this TA. It includes an illustrative representation letter that might be used by an assurance provider when they're conducting a limited assurance engagement under the CSRD. Technical Alert 4 of 2015, that's an update of a previous technical release, and that's a statutory auditor's duty to report to the Corporate Enforcement Authority. So that's, I guess, just an update to bring that technical release up to date. So there's a couple of new statutory references. So some company law legislation that's been passed since 2015 is now included in the technical release. There's an update to some additional IASA guidance from 2019, and there's also updated references to the Corporate Enforcement Authority as opposed to the ODCE. We've had a couple of recent webinars in the recent past, and I've linked them on the slides. If you missed them the first time around, there's a link there where you can go back and view them. My colleague Lillian Halpin was joined by representatives from the FIU, from the Guards, and from Revenue to discuss suspicious transaction reporting. That's a very useful webinar, and certainly one that's recommended in order to expand your knowledge in the area. I know obviously none of us want to come into possession of information that might give rise to a suspicious transaction report, but it's, I guess, important to be aware of what the process is when you do reach that unfortunate situation, and how do you make a report and what processes should you follow. A very useful webinar if you're interested in looking at that. Directors' duties and responsibilities. So my colleague Dee Moran was joined by Sean Tierney from the CEA to discuss directors' duties and responsibilities. And again, if you haven't viewed that the first time around, it's well worth having a look back. Whether you're in practice, which I guess most people on the call today will be, or whether you're in business or if you're a director yourself, it's just a good refresher on the various duties and responsibilities that a director would have. On the Companies House, the authorised corporate service provider regime, so there's a new requirement for accountants who want to file information with the Companies House in the UK, and that's now in place. So under the new regime, third-party providers, including accountants who will be carrying out identity checks on behalf of clients for Companies House, will need to register their business as an ACSP. That process opened on the 18th of March, and I've included a link in the slides where you can find out a little bit more about that. And I haven't seen the link yet, but the Companies House had a very good webinar about that a couple of days ago, and I understand they're going to make that public, but I haven't seen a recording of it yet. So if you're interested in seeing a little bit more about that, you should be able to find that via the Companies House at some stage in the not too distant future. So that's some technical publications and updates that we have. We have a technical release that we're expecting to release in the coming days, in I guess a wider one in relation to the CSRD. So keep an eye out for that as well. So on the next slide, then we look at some developments in standards. If you could just move the slide on one slide there, please. So there's been a couple of amendments and consultations in relation to the Irish and UK standards. So FRS 102 and FRS 105, there's recently been amendments published to that. They were published in March, really just minor amendments just to change the references to the UK company size thresholds, which came into effect on the 6th of April. So nothing too significant there, just to reference the updated company size limits. FRED 86, which was the annual review of FRS 101, so that consultation period has closed in recent weeks, and as people will be aware, FRS 101, it's an optional reduced disclosure framework available to certain companies that otherwise apply the recognition and measurement requirements of fully adopted IFRS. So it's a way of companies to apply, a way for certain companies to apply full IFRS, but with some reduced disclosures. And because it is based on IFRS, each year the FRC carry out a review of that standard just to decide whether FRS 101 should provide any additional exemptions from new IFRS disclosure requirements. So FRED 86 proposed some minor changes to the standard, including things like the consideration of disclosures in the upcoming standard IFRS 18 and whether they should be exempted under FRS 101. And they also included a proposal that any entity who applies FRS 101 should not also be allowed to apply IFRS 19, which is an international standard that essentially does something quite similar to FRS 101. So just provides clarity that both standards should not be used at the same instance. So we issued a response to that, largely agreeing with the FRC's proposed amendments to the standard. And I guess the most significant of the three on the screen is the charity SORP. So the SORP making body responsible for developing the charity SORP has launched its public consultation on the next update to the charity SORP. That was issued in recent days. I think maybe last Friday or last Monday it was issued. So the SORPs are required to maintain consistency with the FRS 102 standard, and as a result of the periodic review on FRS 102 last year, the SORP now has to be updated to take into account those changes and to maintain consistency with the standard. So there are some changes proposed, largely in the area of leasing and revenue, and that consultation is out until the 20th of June. So there's a proposed effective date on that of the 1st of January 2026. So that's one that we'll be engaging on in the coming months. So that's out for consultation until June. So on the next couple of slides, I'm discussing the omnibus, the CSRD omnibus, and many people will be very familiar with the CSRD and with the impact that it was expected to have on their companies or clients. And certainly over the past couple of years, we've been updating members on the various requirements that the CSRD was anticipated to bring. I know I've been on Practice News a couple of times providing updates on it, and we've been engaging with members and with European bodies and with Irish bodies in relation to its introduction. And central to all of the CSRD reporting requirements was the requirement for large companies in Ireland to prepare a sustainability statement in accordance with the European Sustainability Reporting Standards. And just to give a quick overview of the CSRD and its journey so far. So the CSRD, it's a European directive. It was approved in Europe in December 2022. And following this, Ireland transposed the directive into law. And that set out the various requirements for Irish companies. And that included things like the companies who the CSRD would apply to, when it applies from, the assurance requirements, concepts such as double materiality, value chain reporting, and so on and so forth. So I guess that summarizes at a high level the journey so far, and I guess where we got to prior to the omnibus proposals in February. It's worth noting then, whilst all of this legislation and directives have been making their way through the various parliaments at European and at Irish level, there's been some key policy shifts in direction happening at an EU level. And I know Gearóid mentioned the Draghi report, and particularly in the context of tax and reducing the cost of business and rebalancing regulation. And that's also very relevant to CSRD. And I've linked two reports on the screen, the Draghi report and the Competitiveness Compass. And both of these reports highlight the EU's desire that the environment that European companies need to operate in needs to be more competitive. And one of the specific areas that they've called out in relation to that is that there needs to be a greater simplification of the reporting burdens that are placed on companies. Obviously, a reduction in the reporting burdens is a little bit at odds with the CSRD in its initial instance, because it was obviously introducing quite a bit of additional disclosure on companies, and particularly on companies that, although we call them large, they're often not quite large when we look at the type of companies that are classified as large in Ireland. So it's clear from both of those reports that one of the key focus areas of the new Parliament will be improving competitiveness of European companies, and I don't think anybody would really complain about that. Certainly, and certainly when you see that what we've encountered in recent days, people, things like that are quite important for European companies. And in light of this, the European Commission has published its omnibus proposals in February of 2025, and that has resulted in a proposal to substantially water down the CSRD. So a reduction, or what's proposed, and again, what we're talking about here are proposals at the moment. They need to go through various processes at European and at local level in Ireland. But what's being proposed is a reduction by 80% in the number of companies who report under the CSRD. And as we see on the next slide, that reduction is largely driven by the fact that in order for a company to be in scope, it must have greater than 1,000 employees. So prior to the omnibus, it would have been large companies brought in. Now it's large plus 1,000 employees, which will take the vast majority of Irish companies out of being directly in scope of the CSRD. The omnibus proposals then include, they also propose a relaxation of certain rules that were previously planned to be brought in, so a 2-year deferral of the reporting requirements. And yesterday that proposal was passed at the EU Parliament, so it'll now go to the European Council for approval. There's also a plan to revise the ESRS standards, the European Sustainability Reporting Standards, to reduce the number of data points and I guess to generally make the standards more workable, because reporting under them would have been quite a burden, particularly when you get down to the smaller companies that would have been required to report under them. There's a value chain cap which will limit the information that reporting companies can request from entities within their value chain. So if you're one of these companies with a large company with greater than 1,000 employees, there's a limit to the amount of information you can request from your value chain. So there'll be more certainty as regards what smaller companies will need to provide in order to satisfy the CSRD reporting requirements of their larger suppliers. There's less onerous assurance requirements, which I'm sure when I hand over to Karen, I'm sure she will discuss those in greater detail. And there's also the encouraged use of voluntary standards rather than them being mandated. So the next steps, as I've mentioned already, the omnibus isn't in law yet. These are just proposals we're talking about. They're going to be subject to negotiation at an EU level and subject to the trilogue period that all these things go through. And then once approved at an EU level, they will need to make their way into Irish law. So there's a bit of road yet to travel in relation to where they're going, but it's certainly one to keep an eye out on. And in terms of, I guess, what part it'll play in firms, I mean, obviously people on the call here today some will have large clients and some will see that, okay, well, those clients are now dropping directly out of being direct reporters under the CSRD, which, is largely quite good for those companies, but there might be a role that the voluntary standards will play for those companies because they might have suppliers who are larger and who might require information. So it's likely that the voluntary standards will have a little bit more prominence when it does come in. But that's one just to keep an eye out for, just as it makes its way through Europe and as ultimately as it makes its way into Irish law. And just to, I guess, change the subject entirely before I hand back to Jeremy, just to flag on the next slide, we're currently recruiting for a technical manager in the Institute. I've included a link to the role in the slides, so if you'd like to hear more about the role, do get in touch with Dave in our careers team, who will share some information with you about it. And also just to flag that we'll be closing for applications shortly, so if it's something you're interested in, please do get in touch. But that's all from me. I suppose just great to speak to everybody, and hope everyone is keeping well. I'm not sure, Jeremy, am I handing back to yourself or back or
You're handing back to myself, Mike, and you fitted a lot in there in 5 to 10 minutes, as I say to you, and a lot of great guidance there. So please do download those technical alerts and releases. They're free. They're there for you as members, and comes back to your final slide there as well. I know your team has a great variety of work. It's a very interesting roles and so on as well. So if you have somebody that would like to learn more about it, definitely do have a chat in confidence with Dave as well, and a great and very supportive team as well. I'd work very closely with Mike and Dee and the team there as well. So if you're interested, please do take a look at it. And yeah, a lot still to come in the CSRD. It hasn't gone away, I suppose, is the line I'm going to say. And but Mike, hopefully you'll be able to stay with us for a little while. If there's any questions that come in there I haven't particularly spotted, you might take a look, and we might have you back towards the end. Any closing comments or any further thoughts on what you see coming along as well. But great to have you, Mike, and thanks for that update. So listen, guys, moving ahead, we're making good time, and just as I promised you, about halfway through the show, just past 11 o'clock, delighted to be joined by our professional standards team. I'm going to start with the ladies, and I'm going to begin with Karen Flannery, and Karen is our head of projects in the professional standards team. Aidan here in the middle of our lovely photographs is our obviously director of professional standards, and Colin then is our head of monitoring and head of audit monitoring with the team as well, a very busy role. and will be sharing with us some common issues as they come along as well. Before we get into the detail, Karen, hopefully you're good this morning and you can hear and see me.
Hi, Jeremy. Glad to be here. Yes, hope you can hear me.
I can indeed. Great to have you back on the webinar. I know you've been a few times with us in Practice News over the years, a familiar face to many in the Institute. Even in your past life, you have actually worked in that technical team as well, as I say to you, and we work closely together in those areas as well that Mike is coming from. And it segues in nicely, actually, Mike's piece there, because obviously we still have the regulatory aspects of CSRD. Your team has done a lot of work on the assurance area, approving assurance providers and so on. And there's still some things for people to think about, even if their companies and clients aren't in this space at the moment, potentially with the new requirements. So tell us more.
Yes, that's right, Jeremy. And I suppose really just following on from what Mike has updated us on this morning. Colin, you might start moving through the slides there, please. During last year, the CSRD was transposed into Irish law, and the Companies Act 2014 has given the Institute a regulatory role now in relation to the providers of sustainability assurance. And that role is very similar to the role that the Institute has in the context of statutory audits. So we have a role in the approval of firms and individuals to provide sustainability assurance, in the quality assurance of sustainability assurance work, where that relates to non-public interest entity clients, CPD monitoring, enforcement where that is necessary and appropriate, both from the regulatory and disciplinary perspective, and of course the education role as well for those that will be providing sustainability assurance. And as part of the building out the framework for that whole regulatory piece, the starting point was to build that framework into the Institute's regulations. So you would have seen during last year that there was an update to the audit regulations, now called the Audit Regulations Incorporating Assurance under CSRD for Ireland. And that covers all the Institute's regulatory roles in relation to sustainability assurance providers and sets out requirements for firms and individuals in that space. And we started off with providing the authorization or approval framework and developed the necessary application forms, internal processes and procedures and so on. And we're able to welcome applications during the second half of 2024. We approved the first firms to provide sustainability assurance in November of last year. And to date, we've approved 10 firms and approximately 35 individuals at those firms to sign sustainability assurance reports. And it's important to note, of course, that the first criteria for being eligible to undertake sustainability assurance work under Irish law is that the firm is already a statutory audit firm and the individual is already a responsible individual. So that's the starting point. Only statutory auditors are eligible to provide this particular kind of assurance under Irish law. Colin, you might move on to the next slide then for me, please. Mike has mentioned the omnibus proposals, which have had an impact, I suppose, across the board in the thinking of companies and practitioners in relation to sustainability reporting, sustainability assurance, and all things CSRD. But I think in the regulatory space and in the context of approval for sustainability assurance provider status, or SASP status as we call it, we've already seen a slowdown in applications for SASP approval, and that makes sense because there's less urgency for approval as potentially fewer clients are going to be in scope in the immediate term. So that's a bit of a breathing space for firms in terms of seeking approval. And it's an important point to note is that the current omnibus proposals don't propose any change to the transitional arrangements or the grandfathering arrangements that are in Irish law in relation to the approval of SASPs. And the transitional arrangements are actually really important because they provide an easier route to eligibility for SASP approval than will be required down the line when the transitional arrangements run out. So to give you a flavour of what the transitional arrangements are, fundamentally anybody who's approved as an RI before the end of this year, so before the 1st of January 2026, where that person seeks approval as a SASP this year or in the future, they've demonstrated their eligibility by undertaking appropriate CPD, and that's 60 hours of relevant CPD, and there are at least 4 specified subject areas that CPD must be in, and a certain amount of it must be structured. But that's certainly an easier route to eligibility than the situation for individuals who may become approved as responsible individuals after the end of this year, and those people, when they decide they want to seek SASP approval, they will need to undertake a detailed program of education, successfully complete an exam, and log 8 months of practical experience in the relevant work areas. So that's definitely a more onerous ask than the CPD route. So the transitional arrangements are important, but it's also important to emphasize again, particularly when there seems to be less urgency to provide assurance for clients who may not be in scope as soon as might have been expected, is that there isn't an urgency to apply for SASP status before the end of this year. It's that eligibility for transitional arrangements remains in place once a person has been approved as an RI before the end of 2025. So that's an important point to note. And I suppose the consequence of those transitional arrangements is that there may be firms who are considering, well, if there were individuals that they wish to appoint as RI, that they might do so during this year as opposed to next year, for example. And if that is the case, the Institute is advising that any applications for responsible individual status are submitted as soon as possible, to ensure that there is adequate time allowed for due consideration of the application. And each application takes a different amount of time for us to process, because it depends on the nature of the information provided and the nature of the experience of the applicant. And in some cases, an application may need to be considered by our Quality Assurance Committee as well. So all of those stages take time, and to make sure that there isn't a pressure for firms, we would advise early application. So that's a really important takeaway, I suppose, from this morning, to think about that in the context of responsible individual applications. Conal, the next slide, please. I just wanted to note some of the ongoing obligations of SASPs, and these are set out in the Institute's audit regulations. There'll be requirements that are familiar for auditors, because this whole regime layers on top of the statutory audit regime. So obviously things like compliance with the ISQM1, the impact on the system of quality management, it should reflect sustainability assurance as appropriate. The SASP must undertake CPD on an ongoing basis. Anybody involved in sustainability assurance work must maintain competence, and the regular compliance with the audit regulations are required in relation to sustainability assurance engagements, as they would be for audit. And of course, there's an additional annual regulatory fee which supports the Institute's regulatory work in this area. And Conal, if you just move to the next slide, please. And this is my final slide. I just wanted to provide a few links for people when they take away the slides, if they want to follow up and find a bit more information in relation to this. And the email is given there for SASP applications for those that do want to move forward with submitting applications. So that's it from me. And Jeremy, handing back to you.
Brilliant, Karen. You've given us a very good overview there of what is a very, I suppose, a changing and evolving area, and it can create a lot of uncertainty, particularly for our small practice community, of what's required, what's still in scope, what's not. We've had a couple of questions in there. I'll actually leave you look at the Q&A function. Hopefully, Karen, you'll be able to stay with us for a little bit longer. We may have you for a quick chat at the end, as I say to you, if there's anything that's coming out from there. There are a couple of interesting questions there, as I say to you, as to sustainability in the small practitioner, if you'd have a think about it, and I'll leave you gather your thoughts on that. So listen, Karen, that's just there in the Q&A function. So listen, great to have you there, Karen. Anne, it's great to have you along with us as well, and welcome back to Practice News. I know it's actually not that long ago you were with us. I think it's about maybe the middle of last year. Am I correct in saying that, last June?
I think so, Jeremy. Yeah, I think so. So delighted to be here.
It's always, and it's actually, you're back by popular demand. And we often get people who just say, "We're great to have professional standards back," and particularly just to learn about your work, what's changing on monitoring visits, what are the focus areas, what are the common issues that we can address before they become issues in a monitoring visit, and so on as well. And so with that in mind, we try to have you on at least every 6 to 9 months or so. And you've been good enough to put together a quick overview again. And particularly, I suppose, since last June as well, we have our new members after joining us with the amalgamation. And of course, since 1 January, we're all under one, what you call it, I suppose, oversight regime as well. Wouldn't that be correct to say, Anne?
That's right, Jeremy. Absolutely. So good morning, everybody, and delighted to be here. And as Jeremy says, lots to get through. So I'll just crack along. Conal, if you could put up the first slide, please. So I thought I would start just by outlining the visit approach for any new members or anybody who hasn't been through our monitoring regime previously. So we have a number of visit streams. We have anti-money laundering, we've audit, we've investment business, we've practice monitoring. Quite often visits take place as standalone visits. So for example, you might be selected for an anti-money laundering visit or for an audit visit. In other cases, we combine them. Really, it just depends on the circumstances of the firm. It depends on maybe the size of the firm. It depends maybe on when particular streams are falling due. So if, for example, we're scheduling an audit visit and we know that actually it's likely we'll be going again for an anti-money laundering visit in the not too distant future, it might make sense to do both together. So there's a mix in terms of the approach and what type of visit we perform. When in terms of visit selection, we do have cycles. As any auditors are aware, audit visits are on a 6-year statutory cycle. However, there is also a risk-based selection, and we work on risk assessments internally. So in many cases, we do go back to firms sooner than that 6-year cycle. If you're selected for a visit sooner than that 6-year cycle, that's not necessarily a cause for concern. It may well be just that we have come across some information that you've disclosed something to us on your annual return about the types of clients that you're working on, etc. So I would say to you, if we're going back to you sooner than the 6 years, don't automatically think that's a cause for alarm. It may well be just that you've been selected on risk basis. Anti-money laundering, investment business, we also have cycles which are determined by risk. And in the case of investment business, the level of authorization that you hold will also determine the cycle. When you're selected for a visit, firms are notified by email in advance, and you are asked to provide specified pre-visit information. In advance of the opening meeting date, the inspector will contact you to discuss just practical visit logistics, and will talk to you about access to files at the opening meeting. I should have said our format, it can be a mix. Sometimes we do hybrid visits. Sometimes we do fully on-site visits where we go to the firm and spend the entire time of the visit at your firm. And sometimes they are fully remote where we do all of the work on-site. More and more we are doing what we call hybrid visits, where there will be an element of the work done on-site face-to-face, and then there will be some of the work done off-site by the practitioner and using Teams, etc., for calls and discussions. So it tends to be a mix. So the inspector will contact you, as I say, in advance of the opening meeting and just discuss logistics and talk to you about that visit format and what the format is likely to be in your particular case. Firms which were previously CPA firms will see a slight difference in our visit approach, largely in terms of the framework that we conduct our visits through, given that all of our monitoring framework is underpinned by the relevant regulations, be they audit regulations, investment business regulations, etc. So there is a slight difference there. There is also a slight difference in terms of the visit process in terms of how we conduct the visit, I suppose, in terms of how we hold our closing meeting, and that we don't disclose grades immediately at the end of the visit fieldwork, which I understand is a difference. We do have on our website a voiceover presentation, and the link is there on my slide in relation to guidance on monitoring visits. And I would advise anybody who hasn't been through a visit before, or even if you have and you just want to refresh yourself, I would advise you that's a useful resource to take a look at. Could we go on to the next slide, please, Conal? And you can just click through all of those. Great, thank you. So moving on to anti-money laundering. Sorry, just trying to get my notes up here. So I suppose the first point to make is, we see a good level of compliance generally in firms with anti-money laundering regulations and requirements. These are just some common issues that would crop up. We would note many firms have appropriate up-to-date policies and procedures. Really, that is a basic requirement. That is something that we are looking for on a visit. So do ensure that your policies and procedures are kept up to date. A common issue that we see on visits in respect of policies and procedures is that they don't specifically identify who the money laundering reporting officer of the firm is. So do have a look at your procedures and make sure that that is specified. Ensure that that appropriate up-to-date money laundering CPD is taken, and that it's taken on a timely basis. So, regularly attend updates and keep yourself up to date in relation to that. A common issue which arises when we review files is in relation to certification of the client verification as true copies. Again, it's a simple process, but it's one that's often overlooked. So when you have be it the passport or whatever it is on the file, do put a note on it to say that you saw the original document and that this is certified as a true copy. Firms are required to conduct a whole firm risk assessment. This needs to be performed on an annual basis, and this really is looking at the firm as a whole and the clients across all areas of the firm. And what we're looking for there, what the firm should be thinking about there, is identifying any services that you provide to your client, identify what types of clients you have, what services they are operating in or what industry, also what geographic sectors are they based in, and are there any geographic risks that you as a firm should be thinking about. Your whole firm risk assessment and your anti-money laundering compliance review should be carried out annually. These should be sufficiently robust to identify any areas of deficiencies. And in relation to the anti-money laundering compliance review, we would expect to see at least one code file review performed as part of that process. Firms should also be able to identify that they have taken timely remedial action in relation to any issues that are raised. Go to the next slide, please, Conal. So moving on then to audit, and ISQM is a key focus for us on audit monitoring visits. It's now been in place for a couple of years, and really at this stage, it is expected that firms have appropriate policies and procedures in place to comply with the standard. The committee takes seriously any issues, it takes seriously issues regarding non-compliance, for example, if a firm doesn't have policies, etc. in place. Do bear in mind, and we are still seeing firms in some cases grapple with this, ISQM requires a change of mindset from ISQC1. It is not sufficient just to have an off-the-shelf package and to have inserted your firm's name into that. It is a whole process which requires to be tailored to the circumstances of your firm. The standard is scalable, and obviously for a smaller firm, the same level of complexity in terms of process and procedure isn't required that would be required for a larger firm. Nonetheless, every firm, regardless of size, must be able to demonstrate how they are complying with the standard. When you're selected for an audit monitoring visit, you will be asked to submit the results of your last 2 annual evaluations. These annual evaluations are required by the standard. As well as submitting the results, we will also be asking you for the basis of your conclusion. You can see there, I've set out on the slide the various elements of the system of quality management. One, just to draw attention to, firms at this point must have appropriate monitoring and remediation process in place. And that needs to include number one, identification of deficiencies, evaluation of those deficiencies, performing a root cause analysis, and also to demonstrate how the impact of any of those deficiencies impact on the risks identified by the firm and the quality objectives. So really that's where this whole circular piece comes from, that once you've identified your deficiencies, you then go back, you almost start again, you look at your quality objectives, you look at your risks, etc. And so the cycle goes on. Could we go to the next slide, please, Conal? So audit monitoring, RICPD. So this is also part of our monitoring process, and we approach this, I suppose, from 2 aspects. This is underpinned by the IASA guidelines, which were issued a number of years ago in respect of RICPD. So we review RICPD as part of the audit monitoring visit process. And we also, in addition to that, do a risk-based selection where we can select just a sample of RIs and call in their CPD records for review. So essentially, there are 2 avenues by which you might be selected for RICPD. And just to quickly identify there and go through the requirements in respect of RICPD. So RIs are required to plan their CPD annually by reflecting on their knowledge, the skills and the values that they need to fulfill their responsibilities. RIs need to identify learning and development needs and decide on what appropriate CPD will address these needs. We then look to see that RIs have completed sufficient and relevant CPD annually to meet these needs, and very importantly, to demonstrate the achievement of learning outcomes in IES 8 Table A. Once the CPD has been completed, RIs need to evaluate the effectiveness of CPD and revise their approach as necessary. There is a requirement to maintain appropriate written CPD records, including supporting documentation, and such records are required to be retained for 6 years, and that's in order to facilitate the CPD monitoring process. RIs are required to submit an annual declaration confirming their compliance with CPD obligations. There is a wealth of information in relation to RICPD on the CPD Hub in the Institute's website. It includes example templates, etc., etc. Again, I've the link to that at the end of these slides, and I would encourage you to take a look at it. Conal, can we have the next slide, please? So, I'll run through this now really quickly, or as quickly as I can. I thought it would be useful just to highlight some common issues which we see, particularly when on audit visits. And again, it's fair to say, similar to the anti-money laundering inspections, we see a lot of good audit work at firms. And really the purpose of what I'm speaking about today is just to draw your attention to some issues that arise commonly. The first one, audit procedures, ensure that they're up to date. Often we see out-of-date procedures contributing to some of the findings on the files, because if you're not using up-to-date procedures, they may not be fully reflecting the requirements of the most recent ISIS, etc., etc. Also make sure that those procedures are appropriately tailored. For example, if you have a specialist client or a regulated client, ensure that either your procedures are tailored or that you are using specialist procedures which cover the requirements for that client. In relation to risk assessment and ISA 315, remember, risks must be tailored and risks identified must be relevant to the audited entity. We sometimes see just on audit files, firms have literally just used the pre-populated risks that maybe are included in some of these templates, regardless of whether or not they are relevant to the entity. So, you know, what's required under ISA 315 is a lot more than that. So really, you know, take that step back, consider the entity that you're auditing, etc., and ensure that the risks are appropriately reflected on the file. Fraud considerations, again, equally need to be evidenced, including considerations regarding management override of control. ISA 240 has detailed requirements on this, and the ISA also addresses considerations for smaller entities. So do go and have a look at that ISA. Exercise of professional skepticism is something that we you know, everybody will have heard of these days. It's something that we really look at on audit visits. What we want to see is that we want to see evidence of challenge and judgment, and we need to see that recorded on the file. So really the auditor needs to be able to demonstrate that they have evaluated the any estimates, any judgments, any related disclosures, and must demonstrate to us how they have concluded that they are reasonable. Again, I refer you to ISA 540. There are detailed procedures set out there. You know, auditors should be aware, for example, of indicators of possible management bias. As I say, we don't always see adequately recorded the challenge on the audit files, and really it's not sufficient to record on your file that you had a discussion with management and everything appears reasonable. You really need to go a lot further than that. Go to the next slide, please, Conal. So the next one, just to crack on with the common issues, audit of construction contracts. This is something I've drawn attention to before. You know, it's a complex area. There are lots of elements to think about. And just if you do have a client that engages in long-term contracts and work in progress, ensure you're fully familiar with the circumstances of that client. You know, think about your consideration of accounting estimates, management's use of experts, all of those areas. Ensure that your skepticism and your challenge is recorded on the file, and also ensure that the entity has adopted the appropriate accounting treatment for those long-term contracts and work in progress. Issues around consolidation is something that we have started to see a bit more recently. I would say in relation to this, you know, be fully familiar if your client is part of a group. Be fully familiar with that group structure. Ensure that details of the group structure are recorded on the file. Be aware of the consolidation requirements, and if you have concluded that a consolidation is not required forever, well, for whatever reason, whether the entity is relying on an exemption or whatever it is, ensure that you have that reason adequately recorded on the file. Again, it's not enough just to say that you spoke to the directors and the directors said that a consolidation wasn't required. You as the auditor need to be certain that the entity is complying with the appropriate requirements. And I suppose slightly related to that, Audit 600 and group audits and the revised audit ISA 600 is effective for accounting periods commencing on or after 15th of December 2023. So we are now in our monitoring visits starting to look at files where that revised ISA would be applicable. And there are a number of key changes that have come out of that revised ISA, possibly most notably being the removal of significant components, and instead the requirement for a risk-based approach in terms of looking at components and what needs to be consolidated, etc. And this really will require more challenging judgment calls on the part of the auditor. Just to point out, component auditors are now part of the engagement team. So this really means that the RI needs to exercise a more proactive approach to quality management throughout the audit. The old system of one-way communication between the group and the component auditor is no longer likely to suffice. Component materiality is now firmly the responsibility of the group auditor. And again, the auditor needs to evidence skepticism on the file, particularly where there are complex group structures. Related parties, again, an old chestnut, just ensure that you have recorded accurately details of them on the file. The file must demonstrate evidence of appropriate audit work on related party transactions, and that the financial statement disclosures are appropriate and comply with the standards. And again, at the end of the slides, IASA issued an insight. It's just a one-page document in 2022, and it highlights key things to consider in respect of related parties, and it's just useful to have a look at. If we could go on to the next slide, please, Conan, nearly there. So finally, then, in just a couple of extra points to bear in mind: acceptance and continuance procedures. Always, when you're accepting a new client, just as a general observation, if the client is outside of the normal profile of your client base, carefully consider whether your firm has the relevant competence to perform that audit before accepting the audit engagement. And I'm talking there about considering aspects, for example, like, do you require specialist knowledge in order to do this audit? What do you know about this client? Is there something markedly different about this client? Maybe the geographic areas that it operates in versus the rest of your clients. Is it flagging any risks? Are there any specific regulatory risks, including, is it listed on an EU regulated market? Could it be a PI? There's lots of things to consider. Do make sure that you have thought about all of these things in advance of accepting the appointment. And finally, I just wanted to draw quick attention to Audit Regulation 320, just for members who haven't been through our visit process before or maybe new to it. This is a requirement to conduct an annual compliance review, which includes a whole firm review and a cold file review. That process needs to be conducted annually with an external cold file review at least once every 3 years in the case of sole practitioner firms. So when we do our visits, we assess the results of these compliance reviews, and I suppose we compare the results of these reviews against our visit findings. And if we have findings, for example, and you have no findings in your compliance review, we may well conclude that your compliance review isn't sufficiently robust. So that's it, really. Last slide there. I've just put a couple of links which I've referred to throughout the presentation that you might find useful for reference.
And thank you very much. A very comprehensive overview there of the common findings, and it's very important, particularly for our new members, but for anybody who hasn't been through a monitoring visit in recent times. A lot of food for thought there, particularly I suppose around anti-money laundering. It has been something a lot of people have not been through a standalone anti-money laundering visit, or even they've been through a combined one, might be many years ago. So please do be aware that that's a whole new cycle of visits in recent years as well. And of course, if you haven't been through a previous monitoring visit and you're coming from CPA Ireland, great food for thought there as well. And hopefully you can stay with us again for a little while. There's a few questions after popping in there. I'll leave you have a read of them. And generally, as I say, most very appreciative and so on of the review and the depth of it, but some just looking for some clarity or different things. And we might have a catch up with you again towards the end of the webinar if that works for you.
That's perfect. Thank you.
Thanks, Anne. Listen, finally, Aidan, you've been very patient. How are you?
I'm good, Jeremy. Greetings from Belfast, who says professional standards directors don't get anywhere.
That's true. I often used to host this webinar from Belfast, from the Linen Hall, as I say to you. So you're our northern correspondent for the day. That's very good.
For today, yes, indeed.
For today, you're taking over my role, as I say to you. Well, listen, Aidan, it's great to have you back on Practice News, and I know we've had a lot there from Karen and from Anne, basically on the practicalities of monitoring visits. CSRD has obviously been a massive part of your team's work as well. And obviously the amalgamation too, with so many new member firms coming on board from CPA Ireland, and also proportionately a lot of new auditors as well coming on board. I know about 600 or so firms, about well over 200 of them audit firms and so on. But I know there has been a lot of work too for your authorization team, just basically, I suppose, on the changing landscape of practice, Aidan, basically seen a lot of restructuring, new firms being set up, and just a few things for people to bear in mind.
Yeah, sure. And maybe just before I do touch on those issues, I have had a look at a couple of the comments coming in, and typically they're addressing, the complexity and the onerous nature of audit regulation in particular. And like myself and colleagues in professional standards don't sit every day thinking about how we can make life more difficult for practitioners. That's not what we're about. Believe it or not, it's actually trying to help practitioners and make life easier. But everyone will appreciate that, over the last 25 years, the nature of auditing standards, the nature of underpinning legislation, governing statutory audit has just become so complex. I do not disagree with any of the comments that have been put in to the Q&A on that particular issue. When I was starting out, there was one standard, L101, the Auditor's Operational Standard, 2 pages. Where are we today? Bears no resemblance. What I would say is, and you called it out earlier, Jeremy, the FRC is looking at this issue at the moment, and I would encourage people to engage in that process. There is still time. But as well as that, you guys in practice consulting have produced some very useful toolkits, particularly around ISQM1, that members should have a look at, because they really do help in terms of negotiating the complexity that we now have. And look, that complexity, I suppose, is increasing all of the time, and we're seeing now, as you've mentioned, quite a lot of market consolidation. There's barely a week goes past that we don't see some announcement in the media of firms combining, firms being taken over, private capital injections into firms, and not all of these restructurings involve private capital, but quite a lot of them do. And it's not entirely new. This is a trend that maybe started 5 years ago, and but certainly has developed ahead of steam over the last 18 months. And there are pros and cons to these changes in terms of, obviously smaller firms and firms coming together, they can receive fresh capital injections, which will help investment in technology, audit quality, artificial intelligence, even. They can facilitate, and they do facilitate succession planning, and they undoubtedly provide exit mechanisms for partners, RIs, intending to move on. And they facilitate as well a consolidation of specialisms. So what we're seeing as well is maybe 2, 3, 4 firms, maybe more, coming together, and the creation of specialist hubs, particularly in the area of statutory audit. And that kind of helps develop these kind of centers of expertise, focusing the expertise among a smaller specialist team, because we do know that audit continues to be a reducing activity for many of our firms. And clearly there are risks, and those risks we have discussed with IASA, we've discussed with the FRC, and they're all supportive of these changes. No one is saying, "Oh, we don't like this," but they're just saying, "We have some concerns, and let's see how they are addressed." And they expect us to help them address those concerns as well. So what might they be? Well, an undue focus on profitability and growth. Now, I absolutely accept that you guys, firms are running businesses, should be making profits, should be growing. Well, the messaging we're getting from IASA and FRC is just make sure that it doesn't become the be all and end all, that there is still this kind of regard to statutory audit as being a public interest activity. Firm independence and objectivity, clearly something that firms need to be aware of as well, particularly where there is private equity coming in, because private equity houses will have investments and ownership of other entities. And how do we know firms aren't auditing those entities inadvertently? There can be maybe undue haste on the part of some RIs to leave those practices. So what about, succession planning? It's a positive and a negative. Are we seeing a departure too quickly of a lot of corporate knowledge and expertise from firms, particularly as they're being taken over or amalgamating? and remuneration policies, are they being, making sure that they're linked to audit quality and not just profitability? So those are kind of the issues that FRC and IASA are raising, and that we undoubtedly will look at ourselves in due course when we carry out monitoring visits to firms that have been the subject of an amalgamation merger, that have had private equity injections. So what are we looking at? We're looking at audit quality. We're looking at tone at the top. We're looking at the eligibility criteria that they continue to be observed. So with external parties becoming owners of audit firms, do those firms continue to meet the eligibility criteria, which basically require that audit firms need to be owned by auditors? And we're seeing different structures out there in terms of how that can be achieved. So in some cases, audit firms are actually being hived off into separate entities. And there maybe is a service level arrangement being put in place between the audit firm and the rest of the new structure that is there. So in terms of what the Institute's role, clearly we have an interest in those areas that are regulated, that firms continue to be, that they continue to be eligible for those purposes. So statutory audit, investment business. So what we're asking people to do is engage with us early. We are very supportive of firms involved in these processes, but they need to come to us early. Don't come a week before something is supposed to be signed and expect a regulatory clearance, because you won't get it. Because what we are having to do is, wade our way through complex legal agreements, making sure that the eligibility criteria continue to be met. So our focus is on control of the audit firm, particularly in any kind of restructure where we have external parties joining boards or management committees, etc., so that the voting rights remain with eligible individuals. So not necessarily responsible individuals, but individuals who have the audit qualification. In other words, they've come through the exams and they've been awarded the AQ by our education colleagues. And just in terms of a UK dimension, our regulatory bulletin recently carried a reminder of recent changes to the audit regulations in the UK. So where there are supermajorities required in firms for certain decisions to be carried, well, that supermajority needs to be controlled by AQ holders. So there is something there that firms need to be aware of, particularly where they have UK audit registration as well, which is what a lot of our firms do continue to hold. As I say, there is a piece on that issue in the most recent regulatory bulletin, and also a link to some FAQs dealing with that particular issue as well. And there will be a fee for this kind of work. I mean, I have colleagues who are spending weeks on this work, and look, it'll be a reasonable fee, but it has to reflect, and as someone said earlier, support the work that goes on within the professional standards team. So as I've said, future monitoring visits will have a look at these issues where they're relevant, and particularly the substance over form in terms of the agreements that are in place that underpin these firm restructurings and mergers, etc. And just finally, anybody engaged in this kind of activity at the moment, when they do contact us, we will put a number of scenarios to them to help us get to the right place in terms of control. So we will put, what happens if you're qualifying an audit report? Who makes that call? Is there any possibility of undue influence in terms of that decision? What about the appointment of new RIs? Who's influencing that kind of decision? What if you want to resign as an auditor or give up a risky audit client? Is that call firmly and squarely within the remit of responsible individuals or AQ holders within the firm? So there'll be a series of scenarios that we would be putting in front of firms when we get notice that these kind of arrangements are being contemplated. But so just to recap, contact us early. We will be extremely supportive of you We do think this is, you know, an exciting time for the profession, an exciting time for audit firms. And whereas, you know, 3 or 4 years ago, we were talking about audit firms being in decline, this is bringing a fresh, you know, fresh dimension, fresh impetus to the whole discipline and profession of statutory audit, but at the same time providing mechanisms for firms who maybe feel that they've done their time.
I think that's very good advice for everyone. I know we've actually had people who've been through this process actually on the webinar. I can remember one practice McInerney Saunders and Neil Morrison from North Dublin, and they had, again, as you said, worked and engaged with you early. We in Practice Consulting as well are happy to assist where we can. It will mostly be a process in engaging with professional standards and directly with yourselves. We're there to help as well. And you mentioned there, Aidan, as well, your regulatory bulletin. I know it's just out in the last few days. I shared it on LinkedIn earlier. It'll be in e-news today as well. And everybody, if you're new, particularly to the Institute, your regulatory bulletin 3 times a year, it's invaluable for updates on audit, anti-money laundering, these key things we're talking about as well. They're key to have. Aidan, I'm probably cutting you a little bit short, but it's been great to have you here today. If there is any questions, and I know there's a couple other things or comments, and you've been great. I think you've given good feedback on those comments there. That's great. We had a couple of people who were asking about the slides again. We've dropped them in a couple of times during the webinar. And I know Chris has just dropped in the slides again into the chat function. In case you've missed the slides earlier in the webinar, you can download them there, and a copy of the slides will be sent out with the recording early next week as well. So guys, don't be shy, and please download lots of great links there. Aidan and Karen, hopefully you can stay with us for a little bit more. We might be on for another 20 minutes or more or so. But as I say to you, if you have any thoughts written at that stage, we'll bring you back on. But thank you for taking the time to join us this morning. And for you, Aidan, have a good afternoon in Belfast. Cornel, I know Tom and Johnny have been very patiently sitting with us here and getting a great regulatory update there. How are you all getting on?
Good, yeah, thanks for that, yeah.
Hey Johnny, how you doing? And Tom, are you here with us?
Yes, I'm here as well, Conal. Yes, thank you very
Hi
much.
Tom, you've both been very patient. So I'll tell you what, I'll just introduce you and then I'll hand over to yourself, Tom. So look, Tom and myself trained together in one of the firms that became part of Deloitte, and Tom then had a career at a senior level in the insurance industry before setting up in practice, where you are at the moment in running your own practice. Johnny is the founder and CEO of True Fund Solutions, which offers fund services, venture capital, private equity, indeed, just taking on from Aidan's point. But both of you are here today to tell a story, and it is all about the Chartered Accountants Interim Managers. I know, Tom, you wanted to just run through a brief presentation on what you guys do. So I won't steal your thunder, Tom. I'll hand over to yourself to tell us about this grouping of members. Many of them are members in practice, indeed.
Okay, Conal, thank you for the introduction. We got off to a great start to our careers with Deloitte, and the network benefit of that has continued to this day. So today I'd just like to introduce all the members that are present to Chartered Accountants Ireland Interim Managers. So firstly, I'll tell you who they are. So it's a network of over 100 independent chartered accountants, FCAs, with at least 10 years experience, offering CEO, finance director, general manager, tax and project management expertise to enterprises and businesses on an interim, fractional or full-time basis. So a practical example of that might be the financial controller leaves at short notice, or maybe gives a month's notice, and it takes 6 months to find a new financial controller, and the company or the business would go to Chartered Accountants Ireland Interim Managers and source an interim financial controller for 6 months. We're reporting to the members board under the governance structures of Chartered Accountants Ireland. So that's Karen Lanigan's brief. If you have 10 years post-qualification experience and are interested in getting involved with this group, find out more at the link that we've given you in this slide. Okay, so move on to the next slide then, please, Conal. So what can Chartered Accountants Ireland interim managers do for you and or your clients? So the first thing is provide immediate access to a pool of highly skilled professionals for you and your clients. There's members with practice experience available to fill short-term staffing needs of your practice. So that might be around filing deadlines or increased workloads where the practice takes on a number of new clients together, and then provide short-term support to your client. For example, a computer installation, raising bank finance, or a temporary financial controller, as I mentioned. And very importantly, at the bottom of that slide, Conal, there's no placement fees for the service.
Very good.
Okay, so next slide then, Conal. So how are the roles structured then? So this is negotiable depending on the circumstances, but the reality is most are fixed-term employment contracts. So there may be a 6-month fixed-term contract, maybe 12-month contract, depending on the needs. Some even shorter, 3 months, depending on the needs of the business. They can also be via accounting firms. So our member bills your practice, and your practice bills the client plus a profit margin, or on a self-employed basis where the services are provided directly to clients. So just an important note that the provision of accounting service by an institute member requires a practicing cert and appropriate professional indemnity insurance to be in place. Okay, so then if we can move to the next slide, Conal, please. So here is a very quick one-page summary of Chartered Accountants Ireland interim managers. It summarizes everything that I've on the previous slides, but if you need this for one of your clients or to pass on to other members in your practice, this is a one-page summary that pretty much tells you everything the Chartered Accountants Ireland interim managers do. So next slide then, Conal. Okay, so finally then the contact details. So I've given you one of the email addresses. There's more email addresses on the website. I've given you the direct website. And then via the Institute website, there's a link from the Members in Business part of the main Chartered Accountants Ireland Institute website. And last but not least, the LinkedIn link is there as well. So Johnny then will give us maybe a real life example of how Chartered Accountants Ireland interim managers have supported a business in the past.
Yeah, thanks very much, Tom. Yes, just briefly, I'll give you two maybe examples of recent engagements where members of the intermanaged groups have been engaged by two different organizations, and one was a company within the pharma sector, about 200 staff, and they were looking for a resource for a short-term contract. It was to replace the CFO for a 3 to 6 month period while they transitioned to a new CFO. So again, that's kind of the would fit the profile of the members that we might have. Another example would be where a technology company, much smaller, about 15 staff, they have requirement for a fractional CFO. So that was somebody who was come in on maybe a day or 2 days a week, and would help them with the finance function of the business as it grows. But again, very much on a fractional part-time basis rather than a longer term contract. So we see those kind of roles coming in to the group on a regular basis. And a lot of them come in through members themselves. So it's all about the networking and the connections within the group. So it's an important part of the makeup of the group. So there's just two quick examples of, I suppose, the roles that we see coming through and how we help businesses fill those short-term engagements within their organization.
That sounds absolutely fascinating, guys. And like, I mean, in the current environment where it is so difficult to get experienced staff for these roles, the opportunity for people to speak to you and to fill a role on the basis that you're describing. I mean, I think it's a great service. It's if people are here in practice, they're working with clients, and a client has this. I don't know if it's always an emergency, but certainly if it comes up quickly and needs to be filled quickly, I think it's good to know that you guys are there. So I mean, you've given us contact details there. Shouldn't mean, Tom, I don't think I mentioned at the beginning, you're the chair, and Johnny, you're vice chair of the group. Should they make contact with you first, or what would the typical procedure be whereby a role would get filled?
Yeah, so the typical procedure for a role to get filled is the person looking to fill the role will email the address that we've given there, the interim manager roles at charteredaccountants.ie, and then the person that looks after the roles, who's a committee member, will look at it, look at the request, see if all the information is there, and go back, look for further information from the member or practice that's looking for the person, and then it's circulated to all of the members with a contact in the company that's actually looking to fill the vacancy. And from there on, interim managers are no longer involved, so it's not a full recruitment service. So the company themselves have to do all the work after that. If the company needs a full recruitment service, we recommend that they talk to the recruitment section, Dave Reardon of the Institute then.
Very good, very good. And do you have members across the island of Ireland?
Yeah, like we have members across the whole country, and we also get roles in from right around the country. Like the latest one that came in yesterday was a public sector CFO role in Cork.
Absolutely. So if you'd have one sort of message to give to our members in practice, then what would be your closing word to members in practice generally?
I suppose just bear in mind that this facility is there. I suppose certainly we would have been on the recruiting side as well, and we have about 100 members. So when we circulate this, members will look at it, they will decide, have I pharma experience or do I not? If I don't, I'm not going to apply for it. If I do, I am going to apply for it. So you get a very limited number of good candidates that are suitable to fill the vacancy, whereas on other platforms that have a reach all over the world, you might get 10,000 applications from all over the world, of which only 100 may even come close to meeting the criteria that you've set.
Very good. Well, that's really interesting. Johnny, would you be hoping that any members in practice would join you from today, or is it are you full? Was 100 enough, or are you looking for more?
We're always looking for more members, Conal. Yeah, look, it's kind of both. It's really, so if there's any sort of requirement for members in practice for their clients who have a need for our services, that's one aspect. the other side of it is, yeah, if there's any members who feel it might be suitable for them to join up, and if they're looking for roles or engagements, yeah, definitely get in contact, and we'd love to meet and tell them a bit more about the group.
Great stuff. Listen, guys, it's great to have you on. Thank you very, very much for giving us your time. Thank you for your patience. I see, Aidan, you've raised your hand. Would you like to ask a
Yeah,
question?
no, it just struck me, just there was a comment on one of the slides about a practicing certificate, and actually in the last 24 hours I've had 2 queries from members wondering whether what they were proposing to do would require a practicing certificate. Now, I'm not sure they were part of the interim managers group, but it struck me that the kind of activities that they were looking to engage in, they felt, well, let us ask the question. And we do get these quick queries from time to time. And so the answer is, where at all possible, we do not require members to have practicing certificates for doing this kind of work. It is, the services that they are providing are essentially, as the GLADs have outlined, they and typically they're for a single client. And so what does a practicing certificate require you to do? It requires you to have professional indemnity insurance. It requires you to have undertake CPD. And you're subject to a monitoring visit. Now, if you're subject to a monitoring visit, well, what would we look at, right? And every member is required to do CPD anyway to keep themselves up to date. And every member, unfortunately, may have a complaint made against them. You don't have to be a member in practice. So it's not something we would seek to enforce. Clearly, everything depends on individual circumstances. But just to try to provide that reassurance to anybody contemplating getting involved in this, our default is not to require a practicing certificate.
Good in, very helpful. Thank you very much.
That's very useful to know. Yeah, like I suppose generally what we've said to people is we've referred them to the public practice regulations and the page that's there, and I think it's pretty clear from what is in there, when a practicing cert is required or not. But there's obviously always the grey area cases which then seem to get referred on to yourselves.
Yep.
Very good, very good. Well, guys, as I say, thank you very much for coming on, and wish you every success with the interim manager. Doing a great job there, and it's a great service to offer to our members, indeed, to have it, and to the and to Irish.
And just to say, Conal, we actually have one member. I think we've 1 or 2 people expressing an interest to either actually to join up or to actually maybe look at the services as well. So that's great. So guys, you can contact either. You have all the links there. You can contact either Tom or Johnny on that. And indeed, many years ago, I was part of the group. I found it a very supportive group. I know people change over time and so on as well. But just the breadth and range of experience in people across so many roles, everyone there would hold their own as a partner in a large practice and so on. A great experience. So I can only say well done to the guys and wish them the best of luck for the future. And they can help you in practice as well, guys, and with your clients and your needs. So listen, Conal, before we go any further, I think it might be the best thing. We have a couple of questions. If anybody wants to come in, and then we go to the Anchas piece. Would that work out for you? Somebody has asked us, Sean has asked us, is there an update on the new Companies Act, the implementation of the loss of audit exemption? Yeah, basically, guys, and I know Mike might be closer to this as well if he's still there. The CRO are actually putting in place a new IT provider. It will need work on their IT side. They have switched IT providers, went through a tender process. I understand they've selected one. I'm not sure how far along in it. So that's what the delay is there, and we will be we're constant interaction with the CRO on this matter, and trying to I suppose make it abundantly clear to them that this needs to be addressed as soon as possible. Mike may address that when we call him back on in a minute. Just some other things there. Basically, yeah, the slides are in the chat box. I know maybe Anne and Karen there have just thoughts. As I say to you, somebody is asking a passport copy on AML, passport copy being out of date. This is one that we often do get asked, as I say to you. Once you have a passport as a proof of ID on your AML files for somebody, and once it's proved and was in date at the time and proved their identity at the time, and their identity hasn't changed and you don't have any other suspicions, that will still suffice. Again, look, we do a lot more detailed AML webinars. We've them coming up in June time, so it might be good to attend on that one, as I say to you, and go from there. Conal, Mike, Karen, Anne, any further thoughts?
I
If
would,
you're sure, go on.
sorry, I was just going to say, in addition to that, Jeremy, absolutely, once it was in date at the time, but if time has passed, a significant amount of time has passed, you would do well to update it, really. We would need it updated, if there, depending on the lapse of time, really.
Yeah. I take it if it was 6 months or a year, you wouldn't be worried. But if it was like 10 years or 15 years or something, perhaps that'd be your time back.
Really, we would expect, maybe once a year that you have a review of what you have on file and consider whether it is still appropriate or whether you need to update it.
Yeah,
okay.
Brilliant.
Well, that's what we. Okay, that's. I suppose it is to have that process of reassessing what you've got. And at that point, if you're going to get additional proof, you would get an in-date version of the passport. But the simple going out of date with the passport in itself doesn't generate an action, as I understand it. So because that does come up quite often
Yes,
it does.
as a question.
You're right, as I say to you. So, guys, if we've have
Jeremy?
you any thoughts, Aidan?
Yeah, sorry, just before we conclude on this piece. So there's a question in there about the audit firm governance code. It's a minority application, applies only to large firms auditing, PIs. So rather than take up your time, if whoever asked the question wants to contact me directly, I will take them through the history of where that has got to.
Absolutely. I was surprised to see that one actually, Aidan, when I saw it there, because it is all about pies only. Okay. Now, need to see more direct seminars from professional standards, somebody is saying. That's
compliments, yeah.
There you go.
Indeed.
There you go.
So
Great, my time is limited on that one.
Yeah, and indeed, as I say, Aidan, and basically file late in the last few weeks. Okay, so basically, look, if you do have any, I suppose, any other AML questions or different things, you can contact us in Practice Consulting. As I say to you, we'll try to give you a guide or a steer as well. We see a couple more things there, but in the interest of time, we won't spend too long on them. But
Jeremy, could I just add to kind of answer a few of the questions that are in the box together?
Sure.
If could refer people to the regulatory bulletin, which you've already mentioned. Somebody has asked there about common findings and templates, etc. I mean, we do issue a couple of times a year, we do issue up-to-date common findings pieces in the regulatory bulletin. We do refer people when we're on visits. We do refer people to guidance on root cause analysis, etc. So you will see that also. And somebody else has asked about visit gradings. And again, if you look at the website, there is detail there in terms of visit gradings and how they're arrived at, etc.
Very good.
Brilliant.
Well, we have more questions. At the very, very, very end, we might give you a few more, but we really need to go to Leoncha's piece now, I would say.
We do indeed. Thank you, guys. And listen, Leoncha's recording here will be for the next 18, 20 minutes or so now. It's been a busy session, but great to see the questions, great to see the interaction, and thanks to everyone. If we've lost a couple of people, but thanks to everyone, Gerard and Mike and so on, for joining us this morning as well. So let's go.
Hello, and you're all very welcome to the second UK tax update for Practice News in 2025. This is going to be a bit of a bumper edition because I do have lots to cover, so apologies if this runs on for slightly longer than normal. So most of you will know me by now, but for those that don't, I'm Leoncha Doran, the Institute's UK Tax Manager, and I have over 30 years experience working in tax. I've worked for Chartered Accountants Ireland 15 years this month. So in this recording, I'm going to give you a brief update on what's been happening since our last update in February. Maybe not going to be so brief, but that will also include what we as an institute are currently working on for you, our members. So let's get going and look at our key themes for this edition. So you can see that my key themes are the recent spring statement, making tax digital, current lobbying work that we'd like to hear from you on, changes that are taking effect as a result of the new financial and tax years, and some miscellaneous updates. So let's kick off with the spring statement. So a lot of you will know by now that last week the Chancellor, Rachel Reeves, delivered the spring statement on Wednesday the 26th of March. Now, as was expected, this was mainly an economic update coupled with further spending and welfare cuts. No tax rises were announced, but many commentators are saying that the Chancellor has kicked the proverbial can down the road, and that will not be the case in the autumn budget later the year. However, what is clear is that UK businesses are entering a time of economic slowdown, with tax increases looming this month, which I'll cover more on later. Now, although the Office for Budget Responsibility did improve its economic forecast for growth from 2026, it halved the current growth forecast to 1% in 2025. And with geopolitical uncertainty continuing and the threat of new tariffs from the US kicking in this week, the impact of global trade policies on the UK economy remains to be seen. So we still have a lot of uncertainty. Now, on the tax front, a further package of measures to close the tax gap was announced, part of which includes the extension of Making Tax Digital to the smallest businesses, and the news that late payment penalties for VAT and income tax self-assessment have increased from April 2025 onwards. A number of consultations were also launched by HMRC and HM Treasury last week, some of which we'll be asking for your feedback on in the coming months. So these include how HMRC can make better use of third-party data to increase automation and close the tax gap. That closes on the 21st of May. Proposals to strengthen HMRC's ability to take action against tax advisors facilitating non-compliance as part of the Tax Advisors Project. That closes earlier on the 7th of May. Closing in on promoters of marketed tax avoidance whose schemes leave clients with unexpected tax bills. That closes on the 18th of June. And finally, options to simplify and strengthen HMRC's inaccuracy and failure to notify penalties, and that closes also on the 18th of June. Now, the government is also aiming to accelerate change at HMRC through the use of things like voice biometrics, AI in taxpayer services and compliance, and they're also beginning a new customs digital project to share trusted trader credentials with the US Customs and Border Protection. Quite ironic when you think about what's happening from the perspective of tariffs coming out of the US. Now, further measures are expected later in the year to simplify the tax and customs systems, and we're still waiting in the summer of HMRC's announcement when it will publish its transformation roadmap. So that's the digital transformation roadmap announced at the autumn budget, which was expected in the spring but has been delayed to the summer because of the spending review. HMRC will also restart direct recovery of tax debts, a piece of legislation that they haven't really used in recent years, but that will be targeted at companies and individual taxpayers who have the funds to pay any outstanding tax debt but simply choose not to do so. Now, within the Spring Statement Green Book publication was news of a new online service for reporting and paying the high income child benefit charge. So from summer 25, any employee that's liable to this will be able to report child benefit payments to HMRC via a new digital service, which will also enable them to opt to pay this tax via PAYE without needing to register for self-assessment and file self-assessment returns. Two other consultations were also published, one on advanced tax certainty for major products and another on widening the use of advanced clearances in R&D tax relief. And that one aims to explore options to reduce error and fraud, but also to provide more certainty to businesses. Now let's move on to the big ticket item, Making Tax Digital. So buried again within the Spring Statement Green Book was the news that Making Tax Digital for income tax is being extended to the smallest sole trades and landlords with qualifying gross income of more than 20,000 from April 28. Even more worryingly, the government has also said it will explore how to bring the benefits of digitalisation, that's quite ironic, to the 4 million taxpayers who have income below 20,000. Now, we've already challenged the government on the planned reduction in the MTD exemption limit to 20k because we believe it's simply too low and should be set at the level of the VAT registration threshold of at least 90,000. We also feel it's too soon to assess the impact of this project because mandation for MTD doesn't start until 2026. Now, the government also announced further changes to MTD, details of which are in more depth on our website, but they essentially confirm that HMRC's online self-assessment return software filing service will not be available for those that are mandated to use Making Tax Digital. So these taxpayers must file their return and their quarterly submissions for MTD through Making Tax Digital compatible software. That means an additional cost because one or more MTD compatible software products will be needed to meet all filing obligations, both self-assessment and Making Tax Digital. And that makes the choice of software used by the agent and taxpayer of extreme importance. It was also announced that a range of specific taxpayer groups will be exempt from MTD, subject to notifying and satisfying HMRC that they meet the criteria. A one-year deferral to April 27 will also be available to those affected by the changes to the taxation of non-UK domiciled individuals. And the government announced further changes to the design of Making Tax Digital and its penalty reform. Now, we as an institute and the Northern Ireland Tax Committee have been engaging extensively with HMRC together with the other professional bodies to raise the impact of this major change to income tax reporting on individuals and their agents and the significant challenges that this will present. We remain particularly concerned about the significant costs, resourcing pressures and the administration burden of quarterly reporting, but also we question the benefits for taxpayers. However, at the moment, there's now just over a year to the first tranche of mandation of MTD for income tax that will commence from April 26 for those with gross income of over 50,000, and then from April 27 for those with gross income over 30,000, and the 20 to 30k population comes in April 28. Since the spring statement, we've already been discussing these announcements with HMRC, and we will continue to do so at various HMRC stakeholder forum meetings in the coming weeks and months. However, despite our reservations about MTD, we have a responsibility to help members prepare as best we can. So we are working with HMRC and the other professional bodies on Making Tax Digital readiness, and we are developing a cross-department MTD strategy within the Institute to help members in their preparations. However, that does not prevent us continuing to represent members' views as we approach April 26. And to start that off, we will be conducting a short 4-question temperature check survey on Making Tax Digital for income tax in Tax News next Monday, ahead of a more detailed survey in the summer. Okay, despite our concerns, we still recommend that members consider potentially signing up at least one client to take part in the public trial in 25/6 ahead of the first phase of mandation, but only after choosing the best software fit option, and that must be end to end. Remember, it must also file the taxpayer self-assessment. Why are we doing this? Well, the government is clearly committed to this project, and any further delays are extremely unlikely at this point. So what should you do now? First of all, it's important that you understand the technical rules. Make sure you understand the technical rules on what MTD comprises and who is caught. Now, we just want to flag the Institute is also developing CPD courses on this area, but also as well, HMRC are beginning to hold a series of webinars, which we'll publish on our website details of in terms of how to register. We also recommend you examine the specific impact on your client base and practice. Which clients will be impacted, what resources you will need, where the resource gaps are, and what the likely cost is, and how you'll build that into your pricing model. So think clearly, first of all, about your clients, who is likely to be in and who will be out. And I would base that as an initial starting point on 2023-4 turnover details, but ultimately it is the details from 2024-5 which will be determined who is in the first tranche of mandation. Note that HMRC have been writing recently to agents with letters to taxpayers are starting to land on doormats this month. So talk to your clients now and see what help they will need from you and how it will work in terms of your practice going forward. The key is to choose compatible software, as I've already mentioned before. It's also going to be crucial to create an agent services account with HMRC if you don't already have one. And as I said earlier, think about signing up at least one client for the public trial in 2025-6. And I just want to stress that even if a client is mandated in from April 26, HMRC will not be signing them up for MTD. You as their agent or the client will have to sign up themselves. Turning now to lobbying. So we will be responding to 2 specific consultations over the coming weeks. So we want to hear your views on electronic invoicing and the reforms to inheritance tax, agricultural property relief and business property relief, specifically their application in relation to trusts. So please do email tax@charteredaccountants.ie to take part. Now, the purpose of the e-invoicing consultation is to gather views on e-invoicing and how to increase its adoption across the UK with a view to developing a UK-wide approach. The UK is not the first country to begin to look at e-invoicing. Ireland has been consulting on this recently as well. The UK consultation, however, will run to the 7th of May. We will be responding to this, so please share your views with us by Friday, the 18th of April 2025. Turning now to the inheritance tax reliefs and the announcements at the autumn budget, the two controversial reforms to agricultural property relief and business property relief, which will be curtailed to a £1 million limit, providing 100% relief, with 50% relief only available for any value in excess of £1 million. So this will commence from April 2026. HMRC has launched a limited technical consultation on this issue. Now, the purpose of this consultation is not for stakeholders to provide feedback on the overall policy change, but it is limited to examining aspects of this for property transferred into trust. Because this is a technical consultation, it is running for a shorter period of time than the normal 12 weeks and will close on the 23rd of April. We as an institute and NI Tax Committee are very aware of the damaging impact that these reforms will have on businesses and firms in NI, and we've already flagged these concerns to the government in meetings with HMRC and in a call immediately after the autumn budget last November. We encourage members to take the opportunity to respond to this limited consultation and express their wider views on this policy change. I also want to encourage you to share your views on this with us as an institute, because we will again be writing to Treasury to highlight the particular damage these changes will cause in Northern Ireland. So please again email tax@charteredaccountants.ie by Friday the 11th of April with your views. Okay, turning now to the new tax and financial years. So these always see a whole range of previously announced tax changes. 6th of April 25, which is your new 25/6 tax year, and the start of the new financial year 2025 for corporation tax on the 1st of April 25 are no different. So just want to give you a reminder of some of the key changes. Firstly, from the 1st of April for corporation tax and the 6th of April for income tax, the previously beneficial furnished holiday lets regime has been abolished. Former furnished holiday let properties will now form part of the taxpayer's UK or overseas property business and are therefore subject to the same rules as other property businesses. Remember, if a property was a furnished holiday let, this had a range of beneficial implications for its tax treatment, which are no longer available. Primarily, they previously would have been treated as trading activities. Ahead of the increase in employers' NIC, just to remind you that the national minimum wage changed from the 1st of April, but from the 6th of April, the rate of employer NICs will increase from 13.8 to 15%, with the 0% employer NICs threshold due to reduce from 9,100 to 5,000. Now, yes, it is the case that the NIC employment allowance will increase from 5k to 10.5k, but unfortunately, these changes are already impacting on the labour market in the UK and specifically will have a serious impact on lower paid and part-time employees. From the 6th of April, we also see the abolition of the non-dom regime in the UK and specifically the remittance basis for foreign income and gains. There is a new regime in situ, or will be from the 6th of April, that will provide 100% relief on foreign income or foreign gains for new arrivals to the UK when they are UK tax resident in their first 4 years, as long as they weren't previously resident in any of the 10 previous years. There will also be a new temporary repatriation facility to allow individuals who previously claimed their remittance basis to remit that unremitted income and gains to the UK at favourable tax rates, and that will be available for 3 years. On the inheritance tax side, the domicile-based system of IHT will be replaced with a new residence-based system for long-term residents owning non-UK property that were not previously within the scope of inheritance tax. And following the increased rates of capital gains tax from 30th of October 24, business asset disposal relief and investors relief will both increase from 10% to 14% from the 6th of April 25. Both will further increase to 18% for from the 6th of April 26. Note that the lifetime limit for business asset disposal relief is still £1 million, but in contrast, the limit for investors' relief fell from 10 million to 1 million for disposals on or after 30th of October 24. An interesting one then in terms of double cab pickups. So from the 1st of April for corporation tax and the 6th of April for income tax and NIC, HMRC are treating most double cab pickups as cars and not vans for direct tax reasons. Previously, HMRC treated a double cab pickup with a payload of 1 tonne or more as a van, so much more tax efficient for the purposes of benefit in kind calculations, capital allowances, and deductions from business profits. Note that from April 25, it will only be treated as a van if the construction of the vehicle at the time it was made means it is primarily suited for conveying goods. And finally, the reduced threshold for residential land and property in England and Northern Ireland for stamp duty land tax purposes reduced from the 1st of April 25 from 250,000 to 125,000. Okay, on our last topic then, on the miscellaneous front, firstly on the EU exit front, we're still very keen to hear your feedback on the Trader Support Service. Now, also we want to flag that based on feedback from this institute and other stakeholders, the next step in the Windsor framework has been further delayed. Previously, it was delayed from the 30th of September 24 to the 31st of March, but it has been further delayed and will now commence on the 1st of May 2025, when the Green Lane will broaden to all UK internal market scheme authorised traders. This will specifically affect parcels moving from Great Britain to NI. Interestingly, we also now have the launch of a new HMRC service for agents. So from earlier this week on Monday, the 31st of March, HMRC launched a new two-way email inquiry service for agents to help escalate and resolve individual, but not employer, PAYE and self-assessment queries, but they must be over 4 weeks old. Now, more details of how the new service should work were set out in an email directly to agents, which we've also published on our website. Note that for several years we have been lobbying for HMRC to establish an email inquiry service for agents. And although this currently is quite a limited service, we're hopeful that it will be expanded in future and will work well for agents. The Institute participates in HMRC's new HMRC Forum, the Customer Services for Tax Agents and Representative Bodies Working Group, and the aim of that is to assess current agent services and develop improved services for agents that are contacting HMRC with client queries. This new email inquiry service is an output from that forum, which will continue its work, including reviewing the workings of the new service. So if you have any feedback on the new service, please get in touch. And finally, it would be remiss of me not to mark that last week it was 10 years since the Corporation Tax Northern Ireland Act 2015 received royal assent. The Institute has been campaigning for a lower rate of corporation tax for Northern Ireland for over 15 years. And in fact, it's 15 years next month since I joined the Institute. In my first week, I attended the very first debate in April 2020 at Stormont on NI corporation tax. 15 years later, we still don't have a lower rate. But the Institute, based on feedback from members who support a lower rate, is about to launch a refreshed campaign for a lower rate for the region, starting with the publication of a new position paper, which we hope will help local government feel equipped with the tools to reignite this issue. So watch out for more on this in tax news in the coming weeks. And finally, this is just a reminder that this is very much an overview of what's been happening on our key work streams. Remember to try and keep yourself up to date with all the latest UK, Irish and international tax developments through our Chartered Accountants tax newsletter that issues every Monday. There is a link to subscribe to that newsletter on the slide. Lastly, from me, I want to sign off with a thank you for listening and provide you with some contact details to get in touch. We really would love to hear from you. Thanks for listening.
Leontia, thank you very, very much. As ever, a very comprehensive update. And guys, thank you for staying with us. We're running a little bit over, but it's been a packed show today. I know I always say that, Conal, but I know a lot of people got a great work out of the professional standards our 2 tax updates, UK and Ireland, and we have a lot of questions and so on there as well. So what I may say is we'll obviously if there's any outstanding tax questions, whatever like that, provide them to Garrod. And again, don't be shy, guys. If you do have a tax question, the tax@charteredaccountants.ie email address, the team will come back to you. And we do have a lot of CPD webinars and different things as well, like on the AML area coming up in June time. And if you have a quick query, always drop your email to practicemembers@charteredaccountants.ie, and we'll try to assist you if we can. Conal, any final thoughts?
Absolutely. I just 1 or 2 questions there. I'll just try and get them. Someone says the commencement regarding late filing again and audit exemption. As I understand it, the delay there is primarily being driven by CRO installing a new system. They're going through the process at the moment. I don't think they're at a very advanced stage. So I think this is going to be a period.
That's correct, Conal. I mentioned that about 15 or 20 minutes ago. So it's one where we are constantly in contact with the CRO, and that we are advocating the importance of moving as quickly as they can on this matter. And so we will be keeping you updated on e-news and on Practice News again. Hopefully that this will be a movement on this. So I know it's one we mentioned earlier. What's the other one, Conal?
Okay, I have a client with Parkinson's. Doubt he would have updated driving license or passport as in late 70s now. Look, do what you can. Do what you can in the case of it. If somebody literally doesn't have this documentary evidence, get what documentary evidence you can. If you have known the client for many, many years, document that. Put a note on file as to what you have done, what you do know about the client. No doubt if you've had the client for many years, you've got a wealth of documentation around who the client is. I would use that. That's the best you can do in those circumstances. Are we lobbying the Irish government on reduction in capital gains tax? I believe we are. But I think it's probably
again that's one. If you want to drop a quick line to the tax@charteredaccountants.ie, we can relay this on to Garrod as well. As I say to you, there's a constant lobbying effort being undertaken in both jurisdictions. You can see with Leontia and with Garrod, as I say to you, and you can see a lot of the representations actually on the tax section of the website. But not quickly, a quick line, and he'll give you firsthand what's been done, or happy to have I'm sure have a quick chat if needed with you as well.
Absolutely. And finally, somebody asks, AML is a cold file review completed by somebody internal or external to the firm. Now, I know Anne specifically called out the sort of cycle you have to do for external cold file reviews for audit. Look, a cold file review should be done by somebody who didn't do the work in the first place. I think that's, if you can manage that at all, somebody senior who didn't do the work in the first place. Because the reality is, if you try and do a cold file review on your own work of any kind, you're not really going to call out. If you didn't catch it the first time, you're not going to catch it the second time. So look, I mean, we'd always advise people, if you know, to get somebody external to you, first of all, so it's a partner, or better still, somebody external altogether who gets a completely cold eye on the firm and can just say, look, this is what
indeed, it can be difficult even within the firm, I suppose, because if you're the money laundering compliance principal yourself, there might be anybody else who at that level of expertise and knowledge that can actually follow up on and identify issues and so on as well. So yeah, you might be pushed to the external. All right. Listen, Conal, we have while you're looking there, is there any further questions or anything like that? Okay. Well, listen, guys, you've been great to stay with us. On the slides, there's just some webinars we have coming up, guys. We have an ESG masterclass for anybody who wants to learn a little bit more on the topic on the 9th of April. We have our spring auditing update on the 30th of April. We mentioned the charity swap there. I'm actually doing an event with our Ulster Society next Thursday, the 10th. And we have our leadership summit in the Stella and Rathmines coming up as well on Thursday, the 8th of May. And other ones coming up too. And our district societies, if you like to meet in person, we have a couple of events coming up too from our district societies. In Belfast, a legal series with A&L Goodbody on next Wednesday morning in their offices. And we have 2 women in business events, one in Dublin next Thursday in CA House in the evening, and then the following Thursday evening, Holy Thursday evening, on the Hayfield Manor in Cork, organised by our Cork Society. 2 great opportunities to meet with fellow members in person, and particularly as well if you're new to the Institute, because webinars are great, but the networking is no harm either. Absolutely. And the district societies do great work in that. Conal, I suppose we have a few thanks yous to say to everyone. I see we have a few people still with us. We'll begin actually with the person I see, Tom and Johnny. Thank you for coming along with us and joining us on Practice News. Great to have you here your first time. Hopefully it gets interest both from potential members of CAIM and also some work as well, and that you can help, and as I know you have done and can do more, help practitioners with their client needs and so on. So Tom, great to have you on board, and Johnny too. Our professional
Definitely,
standards
Jeremy.
team, Karen, Anne, and Aidan, great to have them. Gerode, Leontia for her recording. I've forgotten Mike, of course, there as well. Conal, you've been great to have you there and keep the show on the road too. And also to thank Chris in the background and Jenny for actually taking all the bookings and so on as well. Guys, you'll be getting a recording of this webinar with the slides again in early next week, probably by Wednesday anyway. As I say, I won't put an exact date in it, and you can watch it back if you missed some of it and so on. I know it's a lot to take in, and that's why we do try to fit a lot into these webinars, but you can get to recording as well and have the slides, and that's it. Cornel, any final thoughts?
That's it. Thanks very much, everybody. And yourself, Jeremy. Until then, take care. Have a good weekend.